Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. With me is Neeraj Shah. Let's quickly look at where the Nifty is at. And it's a fascinating day of trade because from the bottom, we've seen a decent bounce back. And that's the recovery that we have been waiting for. And we've got it, in fact, today. Let's quickly pull up the Nifty 50 index. We've seen this recovery continue over the last couple of trading sessions. But really, today, it was the kind of slight fall that we saw, and thereafter we've recovered fairly well for ourselves. 110 points from the day's low to the day's high, and now we're very close to the day's high, so around 100 points off from the day's low today. So that's the one big positive. Let's look at the heat map on the Nifty, see what's doing well, what isn't. M&Ms and some of the auto counters have been in focus, but M&M in particular showing remarkable resilience in trade today. Nearly 2.5% higher. The breadth is even Steven on the index. SBI as well, on the back of that fundraise announcement, is up another 2% thereabouts. And then outside of that, the IT pack seems to be doing fairly well for itself. Wipro, Tech Mahindra, Infi, those three are driving the IT index ahead. Nestle too within the FMCG pack. Tata Consumer is the other one within the FMCG pack doing well. ITC is up around 0.6 odd percent. Mind you, ITC hotels will also declare numbers today, so that's the other one which we need to watch out for. What's not doing well? Okay, so ITC hotel numbers are out. Shriram Finance is down 2.5% in trade as we speak. Some commentary coming in from HDB not working for that one, so that's largely the texture. Let's pull up what's happening in sectors, and within sectors as well, outside of maybe media, PSU Banks is up 2% and IT is up 0.6%. No surprise where IT is concerned, no surprise where FMCG concerned as well, because we saw some of those FMCG names reflecting on the Nifty 50 index. But PSU Banks is where I'd really want to know who are the top gainers, because SBI of course is doing well, but outside of that, the entire pack buzzing is definitely a positive. Nifty Bank continues to outperform. That outperformance has continued all the way through the morning and all the way through today, at least as of now. Hopefully that sustains. The metal index is one of the losers, and outside of that, the only major index which is losing is pharma. Defense, of course, is down 1/3% as well, in line with the pharma index. But broader markets, Neeraj.
Yeah, let's pull up the market breadth first to try and understand how is it looking. It's been steady throughout the trading day today, which is a good sign. You could argue from the highs, it's come off a little bit, but I don't think too many people will complain. The global picture isn't exactly constructive, right? So Asia Pacific markets have mostly fallen after the US-Indonesia trade deal, but not because of this. But while the trade deal was struck as well, the markets are down. European markets are mixed, but trade largely flat in trade. In fact, there's a warning from an auto major, and I wonder if that has a impact on some of the auto component stocks. But the Renault shares plunged nearly 17% after the French car maker lowered the guidance. So there's some weakness in European auto and European markets by and large. Our markets though, a lot of individual movers in trade, network 15% higher, just that lower. But as you can see, the texture is more towards the gaining side versus the losing side. Let's get up individual movers very quickly. So continued uptrend being seen in Wari Renewable Technologies, up about 4% yet again, and Tilak Nagar up about 10% yet again in trade. Then the ones which are losing today, Newland Labs 5% down, JP Power 4% down, Ola Electric 1% down. All of these have had a pretty strong day the last few. So interesting kind of losses coming in. The buzzing stocks, Deccan Cement up a whole 20% now, Metropolis 7%, and Mass Financial, something that Harsh highlighted, up about 9% in trade today. So that's the other name. And last but not the least, some earnings impact being seen in Network and Hathway. Then numbers are yet to come, but presumably people will extrapolate 2 and 2 and therefore believe that even then Network's numbers could be good in trade. So that's the limited set of names which are active today.
So, okay, so all of those names, and we'll speak about some of those counters as we go through this show. But let's bring in Kush Bora for the call with regard to where he sees the index as well as the Bank Nifty. Kush, where and how are you assessing this?
Sure, first, very good morning, guys. Harsh, to you, aaj khush to bahut ho gaye tum. Your PSU pack has started to do well, and just yesterday we were discussing how the private bank pack is looking interesting, but the PSU bank is where all the action has begun today, largely led by ICICI. But I'll come to that in just a bit. Just a quick word on Nifty. 25,200, we were expecting this 25,200, 25,300 range, to be maintained up until the expiry, the weekly expiry tomorrow. We're seeing that play out rather beautifully. PCR has been steady around the 0.9 mark for the Nifty. 25,200 call had a good base, but now you're also seeing an addition, a massive addition at the 25,200 put, which is a healthy sign. So I think this remains a pivot level, give or take 50, 75 points. We should perhaps see the expiry in that range on the Nifty. Texture remains bullish. Like I mentioned yesterday, you could still make a positional long on the Nifty with 24,900 and thereabouts as your stop loss on the way up. 25,500 and 25,750 remain your target. So nothing much to distort that view. For the last two sessions, including today, we are seeing a higher low formation, which is a very healthy sign. So yes, the positive texture on the Nifty continues. If you have a long position, from a positional standpoint, continue to maintain that.
Long, if you already have longs, continue to maintain that is what Kush is saying. Kush, your top picks for this afternoon?
Sure. Two of them. Yesterday we discussed 197, Paytm as one of our calls, and it's done rather well. 1,000 was the first target. With the kind of accumulation that I have seen yesterday, even today in the sessions that's gone so far, very healthy signs. I think this is one trade that you should continue to hold on to. So now the second target has been revised up from 1,025 to 1,050, and the stop loss comes in at yesterday's initiation price of 985. So Paytm continues as a long call. The other addition to this is Ajax Engineering. Very interesting moves on this one. Mild profit booking along with markets, but yesterday, today, you've seen a good rebound on this on the back of fairly decent volumes in the last two sessions. So 730, 755, your targets on the upside. 680 is where you place that stop loss.
Kush, not exactly. You weren't. The last we spoke, you weren't exactly positive IT. Does that still hold?
Very much. While PSU banks, yes, I did give some caution to in terms of SBI. I'm sorry, in terms of SBI not crossing that 820 mark, but today it has done, and how almost broke the door down. Volumes also up, the move steady. So this pack is doing well. Can't say the same for IT, right? I mean, hasn't really shown that kind of a spark. Even if it does, it's very difficult to rely on that kind of move. The index itself has not really taken out some of the key resistance levels. Right now, trades below the 50-day moving average. But I think that is very clear when you look at the mix. TCS, HCL Tech, even Wipro for that matter, not doing well. Among the large names, perhaps only Infosys is. Even the smaller names had come in for a round of profit booking. So yeah, I mean, you could have a bout here or there in terms of short covering in some of these names, but not a very clear trending move. PSU banks is where you could now see a fresh uptrend emerging.
And what about SBI in particular? You said broke the door down.
Absolutely. I was waiting for the 820 mark to be taken out. It has done that today. I think this move is here to stay. Also remember that it has a bit of catching up to do with HDFC and ICICI, which did have a good run. This one consolidated for the good part of the last month and a half. So I think this move could well continue. From a momentum trade perspective, 850 seems to be like a given target. But if you have a more positional view, then I think you should stay in for a move to 895, 900 levels on SBI.
Okay, and what about some of these life insurance counters, Coach? They came out with numbers, so that's on the fundamental side, and maybe we'll discuss that a bit. But what about how are they looking on technicals? And ICICI Pru and HDFC Life, how are those looking?
Very interesting. Even HDFC Life, to begin with, had a very good run. Right now, you're seeing some sort of profit booking, some consolidation around the 750, 755 zone. But on the whole, I think the structure, the medium-term structure is very positive. 750, mind you, has been a medium-term support zone for HDFC Life. So if that does hold on, then don't be surprised to see a quick rebound to 785 and about 805 kind of levels. So very constructive. ICICI Pru, while the medium-term structure is bullish, it's had far more volatility and some more sell-off in the last two sessions, compared to HDFC Life. So while both remain positive, if I were to pick one of the two, I would bet my money on HDFC Life.
In fact, speaking of life insurance, HDFC Life has kicked off FY26 with a decent performance, a 14.5% uptick in net profit. Vibha Patelkar, MD and CEO of the company, talks about how the company's growth margin outlook trajectory looks like. Listen in.
So I would like to say that the margins have picked up, and let me deconstruct. Last year, so first quarter of last year, margins were 25%. We, as a sector, had to recalibrate our business model with the new surrender charges, which came into effect on 1st of October last year. So the impact of surrender charges, even if I did no change to any of my inputs in my business, it would have had a 30 basis points, which means my starting point on margins was 25% less 30 basis points. So my starting point itself this year was 24.7%. Versus 24.7% margin, I have delivered 25.1% margin, which means it's a 40 basis points increase in margins, despite all the bearishness or the sluggishness that we spoke about earlier. So really the margin increase has already started, and as a sector I am of the belief that over the next 3 to 4 year period there will be enough levers for a slow but steady increase in margins while growth comes back.
Well, that's insurance, and let's get in Gurmeet Chadda, Managing Partner and CIO of Complete Circle, on the show to talk about his thoughts on all of this and more. Gurmeet, great having you. Thanks for taking the time out. I hope all is well. And I hope your funds are doing well too. I'm sure they are. Gurmeet, before we talk about the markets at large, since we're on the topic of insurance, can I ask you, if you look at this space, do you like them? A lot of promise of growth. Somehow, the market returns haven't been really great for the last 3, 4, 5 years, whatever time period you take.
Hi Neeraj, always good to connect. We started getting underweight insurance post the taxation change which happened in the budget, previous budget, not the last one, wherein a lot of it gets sold as investment. This is the reality. I've been a banker for more than a decade, and insurance products in India are sold as investments, whether it is LIC or whether it is the private insurers, irrespective of whatever people would like to say. A bit of it was tax arbitrage, and after that above 5 lakh tax thing going, I think somewhere the banca insurance part and even the retail channel part got impacted. See, this is a sector which will give you a 15% kind of a growth as far as new business premium is concerned. Whatever the Excel sheet may say, penetration may say, I think and I think players who focus on individual protection more, term plans more, non-par products more, are likely to do better. So within the pack, HDFC, we like some of, we only have right now non-life insurance names like Lombard. We are also looking at Niva, and we are looking at some of the other plays, because that is where the growth can be 25-30%. Also, Neeraj, once this limit of Ayushman Bharat cuts 10 lakh for senior citizens, you are talking of 33 crore senior citizens in India coming under a 10 lakh cover. And what it does to overall general insurance piece and healthcare and hospital and diagnostic is a far bigger story than playing this penetration, which we have been talking for last 5-7 years. So I'm better off in capital market plays more, where I see 25-30% growth, whether those are exchanges, depositories, mutual funds. Some of the brokerage firms are now available at 10-15 times versus getting into life insurance. It's always a relative game.
Okay. Gurmeet, the interesting thing is, I mean, today I was watching a link on our channel. A link is effectively a researcher coming in and talking about one particular stock, right? And the stock that was being spoken about was DDEV Plastics. And then it got me thinking that India has moved on from a market which had 10 or 15 main sectors to having a sector, then a subsector, then a supplier to that subsector, and then a supplier to that supplier as well, right? And just that the number of companies available are so high. So I'm trying to understand the classic pick and shovel story, but the point being there are a lot more ancillary industries now to choose from. I'm trying to understand, when you think of, let's say, the building material stuff, right? Would you kind of look at the main building companies or real estate companies, or look at wire companies or cable companies like Polycab, etc., and stuff like that, or suppliers like DDEV Plastics or others who might be supplying to Polycab and some of the others? or copper players who eventually form the raw material. This is such a long chain. How do you think about this? And is there a particular sector in which you like the supplier more than the actual company?
A lot of them, Neeraj, and I think this is where markets get evolved. Even if you look institutional ownership beyond top 500 stocks is now increasing thick and fast with growing AUMs with mutual funds, especially in small and mid cap categories. So one space we like, which is this entire circular economy space, not really linked to building material, which is a recycling space. So plastic, since we spoke, we like this plastic recycling space. We were very early in Ganesha, almost entered in 3 digits. Look at this way, we consume like 5,000 crore plastic bottles. 40% of that is contributed by the beverage companies like Pepsi, Coke, etc. And we recycle hardly anything, right? And plastics takes about 200 years to decompose. In fact, there is a study which says the oceans will have more plastic than fish by 2040. So we really need to do that. And government has now come up with a regulation of using recycled, 20-30% recycled content. And I think there is a fine to it. And industry capacity is just about 60% in terms of meeting that demand. And Ganesha is about, 30-40% of that. So we like that. Then we are also looking at digital dump, which we are doing, which is the electronic waste. The way we are, reusing or getting our mobiles changed, our consumer appliances changed. I think that's another area we like. We also like water as a theme. Water is one of the biggest themes in my view next 5 years. So we like Vatek, we like Iron, Exchange, and some of the other names. And then the last one is zinc recycling. And we like JB Chemicals. Again, got lucky there. That's more a zinc dioxide play. But zinc also has end use in tires largely, and then specialty chemicals from. So I think this circular economy space, where we say that, I think this is a huge, huge opportunity. Global waste management is $600 billion. India is not even 4-5% right now. We're just starting. And some of these problems, clean air, clean water, less plastics, these are genuine health problems which need to be solved.
I'll take a big shift from that, Gurmeet, and talk a little bit about lending, because you've got some of these CV financiers under pressure given HDB's commentary. What's your take, one, with regard to HDB's numbers itself? A lender where the cycle, at least the management indicated, seems to be turning. But at the same time, new listing, HDFC Bank's, subsidiary, and has tailwind both cyclically, but does it have enough bandwidth in terms of valuation? And what do you make of the commentary, given the kind of spillover effect it's had on a Shriram and a Chola today?
I'm extremely bullish. I think we are at the cusp of new phase of corporate lending. 300 out of 500 Nifty companies are debt free. So they have been averse to capex. I think the capex cycle is just starting. I'm some of the early proponents of it. Fingers crossed, very early, but that will happen. And if you see SBI is doing a QIP, a lot of fundraising is happening by NBFCs. And 3-6 months down the line, you will start seeing mortgage at sub 7, car loans at sub 7. And since we haven't seen it for 4 or 5 years, people have forgotten what happens when credit picks up and the secondary impact it has on consumption. My sense is, look at, for example, HDFC Bank. You're getting it at what, 110, 112 BPS, prices around 2000. There is a bonus announcement, and yet there is hardly any reaction on the stock. So somewhere down the line, the market is obsessed with picking multi-baggers, going down the value chain. Sometimes you are missing the simple, boring stories. I think financials are due for a big breakout. I also sense some big reforms coming, both from a FI ownership, also from voting rights being capped at 26%. I think there's an overall needed, and it's a long due. Last time we did serious banking reforms was 2003. So you will see some big reforms coming. Finance ministers talk about NBFCs, how big they can become, how the important role NBFCs will play in next 10 years. So I think there's something big happening in banking from a reform perspective. And once the interest rate cycle starts easing, I think the secondary impact it has on consumption and lending, I don't think so the market is factoring in right now.
Could we just a follow on to that? So one, there's already been a bit of a re-rating that HDFC Bank has seen, right? But and now size has started to matter. So they've done dividend. That makes sense because they likely don't need that capital at this point because there's no growth capital requirement per se, and there's enough profitability to support growth. But how should one therefore look at valuations? Because Pre the merger, you were at 13 lakh crore, large runway. Post the merger, you're double the size now, 25, 26 lakh crore, merger plus a couple of years. How do you look at valuations? Now you're at 2.5 times book. That's one of the most expensive banks when you're looking at it from a global perspective. But at the same time, runway for growth, is it strong enough? Can it do 18% on this size?
I think 15%, yes. 18 would be challenging. I agree with you. I think same thing was said for Bajaj Finance also, a few months back when it was hovering at 6,000 pre-bonus and split. And good companies make a comeback. So once the cost of funds comes down, net interest margins start improving, there are treasury gains because GSEC yield is falling, and then you have a good uptick in the economy in the second half. This credit growth of additional 3-4% can give a big delta because bank balance sheets are leveraged. And I don't see even global banks doing 20% ROEs. Which global bank does a 20% ROE? Or 2% ROTA for that matter. So I think India doesn't. I mean, it's unfair to compare. And look at the largest bank in US is $3-4 trillion. Our largest bank is what, 200-300 billion dollars. I think we will have a $1 trillion bank very soon. So I'm not saying this is a multi-bagger thing, right? But this has been underperforming Nifty despite the recent run up for last 3-4 years. It's never done that in last 20 years. And once the interest rate environment changes, regulatory reforms happen, more participation comes. I think it will continue. So I think financials will probably be 20% CAGR for next 2-3 years.
Very interesting. Gurmeet, you've been an early investor in a clutch of defense names. I know that, right? There are now companies coming out with defense, aerospace funds. So defense is a known theme. Aerospace, both commercial and defense aerospace related component suppliers. How big could this be? And are there companies in this space that, I'm not asking you for a buy sell recommendation, but are there companies in this space which are doing interesting business or you know of? Because I don't think too many in the market know of aerospace sector related firms.
So a lot of defense companies will also get into it, Neeraj, especially the private players, right? And I think one space which is not really aerospace but coming up is simulators. So globally, the ratio of physical training to simulation training is 70-30. India, on the other hand, is 90-10, with physical training being 90. Now, in a digital economy with modern warfare, you cannot have physical training. And this I'm not talking just from a defense perspective. I'm talking from aerospace in terms of even the aviation sector and a lot of spaces where you need simulation. So I think there are a lot of opportunities coming in that space. Also surveillance. I think the kind of borders we just did a strike on Myanmar, which got unnoticed. We have what, 1,200-1,400 kilometer border there. Then you have different, unfortunately, very hostile neighbors across. So that's another opportunity which again has not been. And by surveillance, I just don't mean wiring. Surveillance is if you put modern surveillance at work with the kind of spread India has, that's like 3-4 crores per kilometer. So that's the second opportunity. And then, there's this entire sector. It is same as where electronics was near 3-4 years back. People used to question whether Dixon is still okay. So 4 years back, the top line of Dixon has today become quarterly profit. Right. So just the growth runway, if EU does what 5% of GDP as defense, you're talking about additional $500 billion of defense spending, and not even coming to the Saudis, the Middle East, the African and the Latin nations. So I think the entire thing will get re-rated with Trump being there, unfortunately, for 3 years more.
Point taken. Gurmeet, you've spoken a little bit recycling, you've spoken a little bit about financials. Outside of these two, and defense maybe, any big theme that you're looking at from the next 3 to 5 year perspective, which you're buying today and you believe will be steady compounders for the next 3 to 5 years, where valuation is on your side, growth at the right price?
I think power equipment is one space where, I think the valuations are still reasonable, and including the PSU names, including some of the private ones like Kalpataru. Look at a Tata Power also 30 times, not cheap, but not like really expensive. And then you have a lot of names there, and I think there's a huge opportunity in transformers, in rectifiers, insulators, huge opportunity. Our mix is now fossil, non-fossil, almost reaching 50%. So the issue is always transmission. Second space, I think the other space, which I think is the rural-based theme, the agrochemicals, the normal chemical names, very under-owned because, look at the numbers Relis came up. And I think once the rural economy picks up, the cycle tends to be, much longer. And I'm putting a lot of money on rural recovery coming in that place. So I think a lot of agrochemical names, especially who are thinking ahead in terms of, crop protection, seeds, fertilizers, etc. So PI is a very old favorite. We like Coromandel here. I think the group itself has demonstrated in, being ahead of the curve there. So that's another one space which I think is very underowned and probably needs. And look at the money government is spending on, the different schemes they have, whether it's Ladli Behna, Lakpati Didi, the kind of stuff which is happening on nano urea. There's a clear focus on the hinterland, lifting people above the poverty line and focusing there. And I think whenever monsoon has been 5% above normal, the agriculture GVA goes up to 6.5. Haven't seen that for a very long time now. So there's big re-rating and big potential there for next 2-3 years.
Excellent. Thank you so much, Gurmeet, for a great conversation. Always refreshing to hear new thoughts coming through from you, and that's always the case. So thanks for that. But what we'll do is we'll slip into a very short break, ladies and gentlemen, and stay tuned to NDTV Profit. On the other side, we'll get you all of the chatter from dealing rooms as Swamit walks in for Heard on the Street. Stay tuned.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back to India Market Close. It's 2:30, that time of the show. We're going to get you what dealing rooms are recommending or talking about rather. And Sumit Sarkar, who dials up those phones in a very busy fashion through the day, through the week, joins in with a set of 3 or 4 names that must be the talk of town right now. Sumit.
Firstly, it's Veranda Learning. Dealers are indicating
Veranda Learning.
Yeah, there could be a potential fundraise is what dealers are indicating for Veranda Learning. So keep an eye out for this counter because large HNIs have been accumulating this counter in trade today on the back of this fundraise buzz that is there. For Tega Industries, again, a fundraise buzz that has been there and multiple private equity investors have shown interest in this counter. For diffusion engineers, dealers indicate that large HNIs have been accumulating this counter in trade. The stock is also up 4% in trade. For ABB, there are sell flows on large HNI desk just ahead of the ABB global numbers. Now, the global numbers will come in tomorrow morning around 9:30ish. So keep an eye out for ABB. There are sell flows in trade today. And when it comes to Shopper Stop, there are buy flows on large HNI desk again on anticipation of strong Q1 numbers. So keep an eye out for that counter as well. It's up 5%. And another stock that we spoke about a while back, that is Deccan Cement. That stock is up 20% in trade. The buzz was of a potential stake sale happening to a larger peer. So I guess that's been around in the market and hence the stock has had an upper circuit of 20% in trade.
That's a really sharp up move there, Sumit. So on Deccan, it's interesting. I mean, are there timelines being given about when would the deal something like this?
No timelines, right? The deal is happening is what the dealers are saying, but there are no timelines yet. But what I understand is that the price range what they had indicated earlier was around 1100 to 1200 rupees. So that currently stays. There's no change. Either it could go on the higher side, but not on the lower side is what dealers are indicating. And a couple of names have been shortlisted so far, but no timelines of when the announcement will come.
So I know I'm pushing this, but I'm just asking you, do you know the EV per ton valuations of Deccan Cement?
No, I have not calculated.
Yeah, like I said, it'll be pushing it too much, but yeah, but that's interesting. Okay, so Deccan Cement, watch out for Veranda as well, potential fundraise activity out there because of which HNIs are accumulating in stock. And
Tega Industries.
And Tega Industries, where there could be some fundraising as well. So keep an eye out for these. Thanks for that. Sumit, Kush Bora, a view on any of these stocks? Tega, Veranda, Deccan Cement is up 20%, but if the chart suggests anything.
Book profits. I mean,
all three?
All three of them, or rather you could hold with, trailing stop losses because you see the kind of spike that has come about, in all of them. And mind you, it's not today's spike only. So let me take, a Veranda as a case in point. 195 about 8-9 sessions odd ago, and now already hit 269, 270, and then cooling off from there. Tega also was on my radar this morning, yesterday. Today the volumes are up, approaching overheated territories, and Deccan again had hit overheated territories, some cooling off, and then today, as we already know, that it's at the 20% circuit. So you don't want to sell momentum per se, but my suggestion would be maybe book partially and then hold the rest with trailing stop losses anywhere from 3 to 5% lower, as the case may be, but definitely not fresh buying in at least these 3 names.
Okay, so no fresh buying in those 3 names at the very least. Kush, anything that any stocks that are standing out for you at this hour? Of course, we've taken your picks, but any stock recommendations very quickly?
Yeah, so LIC Housing Finance is something that stands out. We had this call today morning as a part of our advisory research, but it's already run up quite a bit, hence could not initiate it as a call now. But on the whole, the structure looks very interesting. 635 is a minor resistance. Once that is taken out, you would see stock hit 655 and higher levels also. Volumes have been gradually increasing over the last 3 sessions. So yeah, I think interest rate sensitives will do well going forward. PSU banks we've already had enough discussion on. I think some of these housing finance names also might start to show positive traction. LIC Housing stands out for us at the moment.
Very interesting. Also welcoming on board Samir Dalal, Natwarlal and Sons joining us at this point. Samir, taking a cue from where Kush left off, these housing financiers can classify them in two buckets, right? One are those which are trading at super cheap valuations and may or may not offer anything above mid-teens growth. And then there is this other small housing financiers, affordable housing financiers as they call it, and they have shown very, very robust strength in terms of growth, but also in terms of stock price action of late. Which camp do you sit on? Do you like any of these and any names that you have?
Yeah, so thank you for having me on the show. And to start off with, I'm also very positive on the housing finance space, and we've been for some time. LIC Housing Finance, which Kush just discussed, we also have a buy recommendations trading at about 1x book value. It's the largest housing finance play in the space. Look, at 3 lakh crores, growth is not going to be obviously the biggest, but even if they can grow at about 12 to 15%, we can expect a re-rating in valuation closer to 1.3, 1.4 times book, and you have a 15% growth. So I think there is value there, and there is an upside opportunity over the next 1 year. So our initial 1 year target is about 900, and 2 year target is close to about 1100. So we have a buy on that. Another one in the housing finance space, which we've always said on your TV channel, is a company called Samman Capital, the erstwhile India Bulls Housing Finance. Of course, the India Bulls promoters are out, and now it's private equity that run the show. They've running down their old legacy book. They are building up a new book. They're working on co-lending and sell down business models, so they can continue to grow their loan book without really needing to raise too much more capital from here. They have ample capital trading at 0.5 times book value. Their target is to get to 1 lakh crores in AUM in the next 2.5 years. I believe that is something that might be a little difficult to achieve, but even if they can get close to 80, 90, I think they'll have done a phenomenal job given the fact that they're running down their old book. And I think there's value upside, so it's a valuation re-rating plus growth in the overall book. So there. And when it comes to some of these smaller housing finance companies which are doing the low income finance, which was your question as well, there always remains a bit of a risk, because you are taking high yields, but you're taking a bit more of risk on your book. So if for some reason the cycle were to turn negative, then the first round of pain would obviously come to them. Now, obviously, the biggest advantage in a housing finance company is that you don't have too many. I mean, even if you have NPAs, you have the asset as collateral. So from that angle, you're safe, but then the stock upside might get limited. So I'd rather stick with the guys who are doing more prime plus and get the upside from there, have a safer, steadier return rather than try to get a multiplier effect when you have companies trading at as cheap valuations in the space as you do.
Point taken. How do you view a mass financial, Samir? While we're on some of the smaller lenders, this is one stock which is on a tear today in particular. So let me take your view first. 2.4 times book, if I recall right, and does a fairly stable ROA.
Yeah, so unfortunately, Mass is one of the few companies in the housing finance that we don't cover in. Okay. GIC Housing, Canfin Homes, PNB, all of these are under coverage, and we are positive on them. But I think valuations for the others are a little bit not stretched, but on the higher side, with limited upside re-rating valuation, multiple possibilities. Hence, the ones that we suggested are the ones we feel have more upside.
Do you have a view on Mass? Kush, would you have a view? Yes, please. Kush, you're on mute, I believe.
Am I audible now?
Yes, very much.
Yeah, great. And I think here too is time for a partial profit booking. The stock was in a mild uptrend, consolidating with a positive bias when the Nifty wasn't really doing too much. So relative strength was apparent. Today, on the back of this news, the stock's actually given a big breakout, but now comes at overheated territory. So yes, I wouldn't suggest a complete exit out of this one, because if you look at it at a weekly setup, then yes, there is a lot of upside left, and that could take the stock to 365, perhaps even 380 levels. But not a bad idea to start booking some profits at these levels. the breakout was imminent. It's come about. So yeah, you might want to take some money off the table. Maybe redeploy when the stock starts to see some profit booking. At the moment, ride the momentum, but keep taking profits along the way.
Okay, so that's the take coming in for a mass financial stock up nearly 9.5%. Okay, let's talk a little bit though. Union Minister Prahlad Joshi was addressing the media at an event in Mumbai when he said that India has crossed the 50% target clean energy before time. He also said that the world is astonished seeing this. Listen in to a slice of that.
50% for 2030, that was the target. Now we have achieved well in advance, ahead of 5 years. And further also under the leadership of Prime Minister Modi, by 2047, whatever we need to achieve, that we are going to achieve it. And 2070 net zero, towards that also we are planning and we are working out well. I am quite confident. The way in which we are going ahead, you also, I think, you feel confident about the growth and the way in which we are growing under the leadership of Prime Minister. I am quite confident, and even the reaction after announcing yesterday, many world players also expressing very happiness and surprise also. Ahead of 5 years, how India can achieve this. And that is to 243 gigawatt, 244 gigawatt. It is a small thing, not a small thing. So people and the world, some people are astonished, some people are surprised, but we are very happy and world is also very happy.
Certainly, it's a moment to cherish, and we'll be talking to some of the clean energy companies over the course of the next few days, and we'll talk to them about this particular thing. Anyways, but as India crosses the clean energy targets as well, what to expect from the industry going ahead? My colleague Varsha has some details around this. Varsha, what are you telling us?
Well, Neeraj, India is certainly making headlines on the global stage, achieving a significant milestone in its journey towards sustainable energy. Now, India achieves 50% non-fossil power capacity 5 years ahead of target. This milestone was set under India's Paris Agreement commitments. India sets global benchmark for sustainable growth. Let's see the total power capacity, which stands at around 484.8 gigawatt, out of which non-fossil fuel capacity is at around 242.8 gigawatt, and the renewables capacity is at almost 184.62 gigawatt. Let's talk about how this was achieved. So this was accelerated by various government schemes such as PM Kusum, PM Surya Ghar, Muft Bijli Yojana, Solar Park Development, and the National Wind Solar Hybrid policies, which have laid a strong foundation for this transformation. Wind energy, if you see, continues to play a vital role in meeting India's evening peak power demand. Also, India reinforces its leadership as a clean energy front runner as well. India's milestone, if you see, allow for higher goals in clean energy, and the focus areas include doubling clean electricity use per person, and BESS, that is battery energy storage system, and pumped hydro are critical for reliability and 24/7 power. Let's talk about what is the role of AI into this. AI will improve demand forecasting, maintenance, and grid management, and government is also boosting energy storage system to ensure grid stability for intermittent renewables. Lastly, what is the road ahead and what's the installed capacity as of 30th June 2025? The country is moving towards target of 500 gigawatt of non-fossil capacity by 2030 and with net zero emissions by 2070.
Okay, thank you so much for that, Varsha, for giving us that perspective. Samir, coming straight to you, where within the power value chain are you seeing value at this point?
So that's the problem. I guess value is a little difficult to find. Everything else is great. What you talked about, the growth opportunity, we've been very positive on the renewable energy space. We believe the growth opportunity for solar and for wind is great. But let's look at the few listed players that are there, right? So the one place where we do see value is Sterling and Wilson Solar, but they're not the solar park owners. They are more of the developers, in the sense they set up the solar park for you, right? So we believe there's an opportunity because the order inflows, like you mentioned rightfully, that if you want to by 2047 get to a particular level and by 2070 get to a particular level, you're going to need a huge amount of solar parks to be set up, wind energy parks to be set up, and they're doing all of that, right? So we think that growth opportunity is quite good. Valuations will look expensive because they don't have much profits to speak of from the last year. But as the order inflow increases and the turnover of the company goes up, from the last year, we are expecting it to be up 20% this year. And then probably another 25-30% next year, the operating leverage kicks through and that will lead to great profitability. So if you actually project 2 years forward, the valuations may look a little reasonable. Suzlon, we believe, also is a great opportunity. But again, valuations are not cheap. Look, as they keep getting more orders and they execute more, then again, for them, the operating leverage kicks through because they are working at 50% utilization. They really need to get to 100% utilization or close to that number, anywhere close to that. If they can achieve that, then the profitable numbers will start showing in. And then the O&M side will also start kicking in. So you have companies which do the O&M, which is KPI, Green Energy Limited, which is the O&M. Not even KPI Green is a good company, but the O&M part of his business is also something that we think will get great traction going forward. But these are all slightly longer term plays. So even though we believe the next 5 years is going to be great, we would love corrections in some of these counters like Suzlon, in KPI Green also, which has run up quite a bit. But Sterling and Wilson is probably the only one where we feel valuations are a little bit okay if you look at it on a forward basis. And that is the one space we buy. But yes, we are very positive. And then, of course, you can also look at companies like Tata Power, Adani Energies, who are setting up, who are going to be the owners of these facilities. Because once the capacity gets on, so in the initial phase, they're all going to be in the capex. So they'll put in a lot of capital. But once they get into the phase of generating the power and start selling it, then the operating margins are phenomenal. And then they can start paying down their debt. And once the debt leverage gets comfortable, I think then you will see us. So I would wait for those guys a little longer than I would wait for the others, which I just mentioned first.
Okay, that kind of show where we also get in some worldview or global perspective, and we have Jim O'Neill joining us, ex-commercial secretary to UK Treasury. Welcome, Jim. Good morning from where you're at. Give us perspective on all that's happening when it comes to European auto. What are you seeing in terms of trends? And I speak this only from a perspective that Renault has given this guidance that they're seeing a bit of a slowdown. What does that mean for the economy as a whole? You have a great perspective, a good pulse on that. So give us that perspective.
So I have absolutely no idea about what's going on in the Euro auto sector, to be honest.
Okay, sure. I just wanted your take on what that means from a European perspective, but I get your point. Okay.
I think there are so many cross currents going on everywhere, and maybe those Renault numbers reflect a modest part of the negative things that have been influencing consumers. But I would argue that the most important thing, which is being picked up by some leading economic indicators, particularly for Germany, is there is some belief that the shift in German defense and fiscal policy will actually help to improve the economic performance, obviously in Germany itself, but because of Germany's importance to other European countries, maybe elsewhere. And it is very interesting to me because I linked to my old life back in my Goldman days when I played a role helping develop a global proprietary leading indicator. I still look at a number of those statistics which are published either weekly or monthly, and most of them are heading gently downwards. But the one exception is the IFO Institute survey of business expectations in Germany. And so at some point, if that's for real, you will start to see that in the performance of some real-time companies, as well as spending numbers in different parts of Europe, I would guess.
Right, Jim. Jim, if I were to take a couple of steps back and maybe zoom out from April to now, everything that's happened with regard to tariffs, how realistic is this? Implementing tariffs without really having a knock-on effect on global as well as US inflation. How realistic is that in your opinion?
Well, first of all, you asked me that question the day after the latest US CPI numbers have unsettled the US bond market. And if you delve into the details, I read an analysis of it just 45 minutes ago. There are the first signs that the tariffs have started to come through import prices into consumer prices. And so I suspect we're about to enter a new phase of how the markets are behaving, because of course, as we go through each day between now and August the 1st, the US is seemingly going to announce deals like the one it claims it's agreed with Indonesia overnight, or it's going to have higher tariffs with countries that it can't reach a deal. The markets, as you imply, have effectively assumed there's going to be no inflation pass-through. The US raises revenues, which the Trump administration is almost boasting about from tariffs, and there won't be negative consequences. But that is very unrealistic. And I think the CPI numbers we've seen yesterday give you the first hint that there is some pass-through. And obviously, if this is the new mood, it's only 24 hours, but that means the higher the tariff announced, the more people will start to worry about that aspect of it, which itself could have consequences for stocks.
Jim, there was some thoughts that Europe can't give too many concessions any which ways because Europe doesn't have anything to give when US talks about or Trump talks about what they are doing. So the question though is this, that if this were to reach any kind of a stalemate position, if you will, does it have a material impact on global growth for the second half of the calendar? And can markets, let's say for example India or select markets which are more inward oriented, shine because of their ability to grow despite global growth pressures?
That's the $1 trillion or the 40 trillion rupee question. I don't know is the honest answer because it's so complex, but I think you've got to look at three interrelated parts. The first of which is what's really going on in inflation. We've also had in the UK this morning, coincidentally, a higher than expected inflation print. And it's important to not ignore that in both the US and the UK, so-called core inflation in the very latest month is running quite a bit ahead of target. And so if that persists, you will see bond markets starting to worry again about inflation. So that would not be good for global financial conditions. And obviously for those markets that are most overbought, or especially ones that are involving a lot of leverage, it would probably be a negative. The second thing, which is also bond related, and I'm surprised it's not getting more attention, there continues to be quite a significant deterioration going on in the performance of Japanese bonds. And Japanese investors, of course, have been one of the largest accumulators of foreign assets for a long, long time. And at some point, if Japanese bond yields keep rising, that would have its own negative consequences for elsewhere. The third thing is whether the other issues that are affecting these, including tariffs, but also directly fears of inflation, start to affect real economic numbers. And I think in that regard, it'll be extremely interesting to see the monthly purchasing managers when we get to the start of August for the month of July, because that will give us a flavor as to whether this is really starting to affect the way people spend and companies behave. So if I sort of put all of that together and going right to your question, I think there is something to be said for defensive markets, which have some ability to reflect what's going on in their own economies separately from all these global influences could do better. And obviously India stands out, certainly in so-called emerging markets, as a very big, if not the biggest example of that. However, if we get into a situation where there is a whole new sustained rise in global bond yields, it will be very hard for anywhere, including Indian markets, to resist the consequences of that. So there's a lot to play for, and of course, not only have we got those PMIs to look forward to, but it will coincide with the August supposed deadline for the Trump tariffs.
Well noted. We'll leave it at that, but thank you for these answers. They really help, and much appreciate your time.
Okay, good luck to everybody. Take care.
Thank you, you too. That's, well, an important voice, Jim O'Neill. But like we said, the European markets are very, very quiet right now. Let's take a break. On the other side, we get you top BTST ideas and a lot more. Stay tuned.
Brought to you by Canara Bank. Together we can.
Sammaan Capital Limited announces a public issue of secured redeemable NCDs, offering coupon rate of 9% per annum for NCD holders in category 3 and 4 for 24 months in Series 1. Tranche 4 issue is open for subscription. To subscribe, log on to www.sammaancapital.com. For issue structure, risk factors and more details, please refer to the Tranche 4 prospectus available on the websites of SEBI, stock exchanges, company and the lead managers.
रास्ता है वही शहर, बदले हैं नजारे या नजर।
चाचा, इतना सारा पानी, ट्यूबवेल, बिजली तो आती जाती है, ये सब अपना सूरज है ना, सब उसका कमाल है। सूरज।
तू कब आया अभी लाइट से?
अरे वाह ताई, पहचान गई? शहर जाके आँख का ऑपरेशन करा लिया क्या?
शहर जाए मेरी जूती, मैंने यहीं अपने गांव में ही करवा लिया। वो जो सूरज है ना अपना, वो सब कर रहा है।
Right now across the world, even in Harvard, is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ NDTV इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armor.
Q4 FY25 numbers, of course. Now let's look at what this means in terms of FY26 book value. The QIP, the book value is at 549 rupees a piece. Now that inches up by 2% odd to 559 rupees a piece. This gets you a price to book value of around 1.47 times the current market price. That's the price to book value based on the post money book value. They've also approved raising for around 20,000 crore via bonds in FY26. This obviously signals growth, positive momentum for both State Bank of India and the banking system as a whole. State Bank of India gearing up for growth at a time when we've seen the repo being lowered and deposit growth coming back. So both of those likely to be levers. Let's quickly go across. Kush, give us first a technical view on a State Bank of India. Give us levels to look out for. I know you're positive because you spoke about that, but give us levels to look out for on the immediate short term.
So yes, after crossing that 820 mark, and looks like that we'll be closing on SBI above that mark. The trend, the positive trend resumes on the upside. You're looking at 860, 865 once that is taken out, and 895 to 900 kind of level as well on the SBI. Very much on the cards. I think that spurt which was due will come about. This will take the PSU bank pack also higher. So if you want some more names in the PSU bank, then I prefer Canara Bank and PNB. So yeah, all three are something that you can keep on your radar.
Okay. Well, the other set of stocks, and since you're talking about financials and non-lending financials as well, look at Edelweiss. There's been a sharp jump up there in the stock. Just watch out for that one. Now, I wonder if some of these capital market plays, which have got multiple other businesses within them, might become good plays. Samir, any thoughts here? I mean, it could be an Edelweiss, it could be a JM Fin, it could be Motilal Oswal, but multiple financial capital market plays having a variety of businesses under them.
Yeah, so the ones that have a variety of them and that cater to more of the insurance or the mutual fund management business, I think there is value. Where the heavy dependence is on brokerage, and when you say capital market, when you talk about some of these BSE, MCX and all of these, there I have a bit of a worry because right now the kind of volumes that you're getting on the exchange are tremendous. And you always go through cycles. These are cyclical businesses. When you have a bear market, the volumes will decline, and then the operation, the turnover from that vertical will start declining. Now the point is whether you should look at some of these companies which have already run up quite a bit. I think JM's seen quite a bit of a run up. So has Motilal Oswal. Edelweiss I don't have coverage on, but they do have a fund management and fund management business, but they sold off some of the other businesses that the wealth management and all, which has now become Nuvama. But something like that, Nuvama or Anand Rathi, which do wealth management 361, those look like interesting plays because what you're going to see is more of wealth management picking up as an industry, and this is a steady stream of revenue. So even when the cycles are down, there is still money that you're managing, and that money is earning you a fixed revenue kind of a stream of income. And similar is with the mutual fund business. So companies like HDFC, AMC, or a Nippon Life Asset, those are more of the plays that I think one should focus on from a longer term perspective. Let me put it across one way. All of them valuations are very, very expensive, right? Be it an HDFC, AMC, be it a Nippon, be it Anand Rathi, be it a 361, they're all trading above 50 times earnings, which is something which I don't think is sustainable. I believe there is growth, but I think corrections would be the right time to buy into these long-term sustainable businesses. Stocks like BSE, MCX, which require the turnover, companies like Angel, which requires the constant churning from clients, those might see a bit of a decline when the bear market happens maybe in the next 2 years, and that time you'll get a much better opportunity buying them much lower.
Okay, gentlemen, we'll leave it at that. Both of you, thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
But some of these stocks have done well today. Edel, like I said, is really ramping up the charts now at the highest point of the day, and a surge through the trading day today for Edelweiss, so keep an eye out for that. The Nifty Bank is doing well, and keep an eye out for that one too. But what is kind of iffy today relative to the past few days is Amber Enterprises, and that's the one that is a part of our bull and bear segment, bull versus the bear segment, because it has slipped and is drawing mixed reactions. Puneet joins us to tell us what's working and what's not for Amber. Puneet.
Well, thanks so much for that. So it's definitely been a stock that's rewarded investors a lot, 66% returns in the last 1 year. But when you look at the key update recently that the company's put out, they're looking to raise roughly 2,500 crores via permissible securities. This can be via equity as well as debt instruments, but the signs of an equity investment and raising funds via that has been the galore, because we mentioned that 5 out of 6 EMS companies have raised equity fundraising over the last 6 months, and these include the likes of Sirma, PG, Electroplast, Centum, amongst others. So we could see Amber also joining the funding bandwagon via equity, and hence we've seen that reaction to stock over the past month as well, since the news has been out there. So we're seeing the positive reaction. On the other hand, recently the Q1 earnings could be slightly under pressure, and that's largely because of the weak consumer demand for air conditioner, which is Amber's mainstay business. So we have seen that kind of weakness in some of the quarterly updates that have come in, as well as comments from management like Blue Star to NDTV Profit. So that could be one of the key impacts impacting the stock in Q1 based on results, but something to track going forward. On the other hand, the second bull and bear case is the demand for the company's new vertical PCB, which is printed circuit board. Now, the management had said that it's a business of 32,000 crores in India and only 9% is locally manufactured, which gives Amber one of the biggest growth verticals in a new business that's still not taken off in India, yet to be manufactured globally. So we could see one of the biggest winners here in Amber Enterprises, but the low margin consumer PCBA share is still with Amber, around 30 to 40% of that. So they will have to look to reduce that, go into the high margin PCBA, which they've already started investing in. So that'll be a key update to watch out for, but still at the start and the onset, the PCBA might drag the overall margins. When you look at the third bull and bear case, and that's regarding the electronic business of the company, it could be the next growth driver. The company is investing 4,000 crores in this business, and the key aspect is that the margins of the electronic business is much higher compared to the traditional AC business that Amber is in. So we could see a brand new vertical being actually created, a company within a company itself, and hence could see Amber as one of the biggest beneficiaries of the electronics business going forward. But brokerages like JP Morgan have seen limited growth from the company's mainstay business in consumer electronics, and that's AC specifically. They see that the shift from assembling electronics and ACs to manufacturing components from them could see a jump and could see limited growth, is what JP Morgan's views is. Finally, in terms of valuations, 46 times price to earnings for FY27 is not cheap by any means, but the kind of growth trajectory it's offering in all three of its verticals of electronics, consumer business, as well as railways now, which has a torrid time over the last 2 years, could see one of the key aspects, but valuations don't leave too much room, is what brokerages are mentioning, and there is no kind of cushion in case of any error. So definitely the bull and bear case for Amber stands on a lot of positives that the company has done over the past year or so. The fundraise will be one of the key ones to watch out for, and we are expecting that in this quarterly result, as is the AGM on 12th of August. Could see some updates then. If it's an equity one, it'll be the first since the company's IPO back in 2018.
Thank you so much for that, Puneet, for all of that perspective with regard to an Amber. The stock has done 66% in the last 12 months. Pankaj Pandey joining us, ICICI Direct. Also, Shivangi Sarda joining us, MOFSL, to talk to us and discuss more. Pankaj, 66% return, 12 months, stock trading at above 100 times trailing 12 months. EMS, a very interesting play, extremely solid growth. How do you rationalize this? Only by the growth? And are there any top picks in your bucket of EMS stocks?
Yeah, hi, good afternoon. Thanks for having me. I think EMS as a space overall looks quite attractive to us. Absolutely no doubt that most of these stocks are trading at rich multiples, but it is also a fact that the entire segment is expected to grow about 25-27% odd, and some of these companies are expected to sort of grow even better than that. And the companies what we are liking is Dixon, where we have a target of about 20,000. The other one is Sirma. I think the Sirma relatively I will prefer more because it's a far more diversified play. Plus, I think they are also looking at export as a key segment. So it's a play on industrial, healthcare, and automotive. So from that perspective, I think overall this space looks good to us, and within that, Dixon and Sirma is what we prefer.
Okay. Shivangi, great having you. I want to take a few quick updates from you, Shivangi, because last week when you joined, you gave us some splendid calls. You were long on Loris and it hit your targets quite admirably. So first, an update. What do you do with a Loris or a Divis or some of the others, or particularly Loris, doesn't matter?
So I believe I remember that you had also asked me that the Loris stop loss that I had given is quite narrow. But yes, of course, the stock structure was quite positive, and we've seen that open interest addition has been consistent in the last 3 weeks. And we are seeing that even after the breakout, there is quite a lot of follow-up buying over here, which is quite positive. Stock is comfortably holding above 800 marks. So till the time it holds above these levels, we could trail the stop losses ahead, and we could look for a next target of 850 odd levels. But of course, 800 would now become a support for this one. And we could continue holding this one, but of course, fresh buying at these levels will not really favor a good risk reward.
Okay. The other one that Chandan spoke to us about in the morning, and because he's your colleague, I'm asking you, Shivangi, is Biocon. He was very constructive there. The stock hasn't quite moved. Is it a good time to buy right now, or would you, because it's not shown a reaction, you rather move on to other stocks?
Yes, of course, Biocon coming from the pharma space, we've seen a lot of action in the last 3 weeks. But again, this stock had, rallied well in today's session. Roundabout tried to cross 400 marks, but, failed to hold above the same. So near about, if it, manages to cross 400, we could see actually momentum driving and continuing this stock for another 10 to 15 points move. But of course, upside, there is a little bit of call writers which are coming in. So we are seeing some bit of consolidative phase over here at this one.
Okay. Shivangi, a call on the indices if you're trading them, and your stock ideas for the afternoon.
So talking about the indices, we've seen that Nifty 50 has witnessed a comeback of the bulls from the last 2 trading sessions, and clearly the bears have, underpowered. And we have seen that, it's comfortably trading above 25,150 marks for most part of the day today, and which indicates that there is a very strong buying interest, even though the follow-up action is slightly missing. But the bulls are very active at the support levels, so which indicates buy on decline is to continue over here with a support of 25,000 levels, which is a psychological zone as well. And for the next up move towards 25,500 and 25,650. But overall, strength is quite visible here. Talking about Bank Nifty, of course, PSU space have been driving this entire index. And, we've seen that even though the heavyweights have taken a back foot, but from the last 4 weeks, Bank Nifty has been consolidating at the higher zones very comfortably, with IVs cooling off, which indicates that, there is a comfort here even at these levels. So Bank Nifty could also be a buy on decline candidate with a support of 56,850 zones and the next target towards 57,750 levels. Individual stock calls, of course, first up is from a PSU banking space, which is RBL Bank. We've seen this one has been absolutely resilient from the last, 6 months, consistently making higher highs, higher lows formation. Even on the weekly basis, we've seen it respecting an upward sloping channel. And on the daily basis, from the last 2 trading sessions, the volumes have been remarkably high. Even though price action was not seen yesterday, but today there is a price confirmation as well, with RSI showing positive divergence. So this one is definitely a good technical and derivative pick with a target of 280 levels and a stop near 265 zones. The next stock would be CDSL. This entire space, in fact, has been reviving, and CDSL has taken a good support near 1660 zones from the last few sessions. And in fact, this one has been a very strong one from the last 4 months. Again, after the corrective phase in the earlier weeks of July, we've seen that the stock is again witnessing a good rebound. Even in the recent pullback phase, there was a lack of conviction among the bears. Or we could say that selling was exhausting as the volumes were quite narrow during the fall. So risk reward wise, this negation is holding well for this stock, and we are recommending a buy on this one with a target of 1800 and a stop of 1700. So.
Okay, thanks for that, Shivangi. Pankaj, autos are in flavor. I mean, two-wheelers are doing what they are doing with the Hero annual report, etc. But Tesla has brought the buzz in terms of news flow out here. Are you a buyer into any of the auto names currently ahead of the numbers, or are you preferring auto components? And which ones?
So Neeraj, overall, when we sort of look at auto, I think you have Select Pack, which has been sort of doing well in terms of monthly numbers, the likes of say M&M, both in the SUV segment as well as in the tractor segment. Similarly, you have TVS, which is doing in the two-wheeler segment, and Eicher again doing in the premium two-wheeler segment. So I think these are some of the companies which we like. And overall, our sense was that the growth will become broad-based, but I think despite the tax benefits, we are yet to sort of see. Probably we'll have to wait it out till the festive season for numbers to sort of improve. So we are very selective on the auto as a pack. Probably Tata Motors from a valuation perspective looks attractive, while you still have challenges, especially on the JLR front. It is unlikely that they are going to cross 4 lakh kind of volumes. But yes, valuation-wise, it is attractive. Within the auto ancillary names, I think Uno Minda is our topic for quite a period of time, largely because this is one company which has been growing above industry for a considerable period of time. So we like this company particularly for the growth it delivers compared to the industry. So that is the company which we like in the auto ancillary space.
All right, so that's on the auto Ank side of things, but we'll continue to speak about auto. Global EV giant Tesla is reportedly in early talks with Bajaj Alliance and ICICI Lombard for potential car insurance tie-ups in India. While discussions remain preliminary and non-exclusive, sources say that ACCO has emerged as Tesla's preferred insurer. My colleague Agni brings us the exclusive details. Agni.
Tesla might have entered India, but the bigger question that people are asking are who will be the insurance provider for the company. Sources tell us that Bajaj Alliance and ICICI Lombard are hot in the race to get into tie-ups with Tesla for insurance in their India vehicles. Now, Bajaj Alliance and ICICI Lombard are in early discussions with Tesla at this point, and no terms have been finalized yet. Sources tell us that the firms are pitching for non-exclusive tie-ups with Tesla, and Tesla sources are also telling us that the decision will ultimately depend on the insurance department working out of the company's Hong Kong or Singapore offices. Now remember, to get a license in India, to get an insurance service provider in India, Tesla needs to get a motor insurance service provider license from the IRDAI. That will take another few months is what the sources are telling us, and only then will they be able to do a proper tie-up with an insurance provider. We have reached out to Bajaj Alliance and ICICI Lombard for their comments on the story, and this is a developing point, so do stay tuned as we bring you more updates.
Okay, and we'll keep bringing you more updates. Not sure where some of those insurers are going. Let's pull up a Go Digit. Let's see how some of those names are doing. A Star Health seems to be doing surprisingly well. Shivangi, wonder if you have a view with regard to a Star Health 5% higher?
Of course, this stock has shown a lot of momentum today, but we've seen that this has been quite a lot of this has seen quite a lot of volatility in the past. Even intraday swings are quite wild in this one. Of course, we've given up a little bit of the gains in today's session, and we would wait and watch for the next session's opening for it, to sustain, because we've already seen a good rise unexpectedly in this stock because this stock tends to consolidate more than rise. So we'll wait and watch for this one.
Okay. Do you have a view on some of the general insurers, Pankaj? Lombard came out with numbers. You also have a decent move on Star Health today. Of course, 5% it was up at the day's high, but it's cooled off substantially from that point.
So structurally, our sense is that it's very difficult to sort of sell insurance without the tax incentives. So we have a clear bias towards asset management companies. I think whether you look at SIP flows or the kind of flows what you're getting in core categories, And whether a large cap does well, mid cap does well, or small cap does well, I think AMCs are far more better business from a portfolio perspective. Key preference again is with HDFC, AMC and Nippon. I think most of their funds are also sort of doing relatively quite well. So I think these two names come up from the overall non-lending space.
Okay, so that's the way to probably play it. Pankaj, quick, okay, let me first take the BTST call. Shivangi, give us your BTST call for the day.
BTST, I have identified RBL Bank itself because of the open interest activity and surge that we're seeing in the last hour. Also, PSU banking space have had a good tailwind in this one, and it's beautifully respecting its exponential moving averages as well. So this one would be in radar for 280 targets and a stop loss of 265.
Okay, so that's the take coming in on the BTST call for the day. Let's talk a bit of consumption. Daulat Capital has initiated buy on Global Spirits with a target price of 1,600 rupees a piece. Well, that's a solid upside. Saumit's here with more with regard to that report. Saumit.
Well, yes, Global Spirits, where Daulat Capital has initiated coverage, seems to be a big brokering note for today, given the fact that it's a buy rating and the target price stands at around 1,600 rupees, which suggests a return potential of nearly 55% from the current levels. Now, the brokerage is saying that the transformation of Global Spirits is underway and going forward, not only growth, but they could also see a P re-rating, which is most likely to happen when it comes to Global Spirits. Now, the brokerage is saying that the manufacturing business is set to grow nearly 5 times. That will be the EBITDA growth over the next 3 years, and they believe that the strong cash flow from this segment, that is the manufacturing segment, should accelerate growth in other segments, which is the Indian-made Indian liquor segment and Indian-made foreign liquor segment of Global Spirits. Now, it also says that the country liquor or the Indian-made Indian liquor segment is a cash cow and a growth machine for Global Spirits, and they are seeing this segment as a strong growth, given the fact that the UP, Bihar and West Bengal will drive significant volume upside for Global Spirits going forward. They also say that the manufacturing and the Indian-made Indian liquor segment shall also provide downside protection to investors going forward. Now, when it comes to the Indian-made foreign liquor segment, they are seeing a structural growth story here and a PE re-rating lever coming in from this segment. They believe that this segment is well positioned and they are expecting this business to generate around 500 crore of EBITDA over the next 4 to 5 years. And they also say that as growth unfolds in the Indian-made foreign liquor segment, the multiples will also get re-rated for Global Spirits. Now, they say that Global Spirits, after seeing a supernormal profit from FY20 to FY22, has seen a severe earnings decline over FY22 to FY25, but this headwind is expected to reverse for Global Spirits going forward, and they're expecting the company's EBITDA to grow at a CAGR of nearly 37% over FY25 to FY28, while the EPS CAGR expected is nearly 101% from Global Spirits over the same time frame.
Okay, thank you for that, Saumit. Pankaj, do you have a view?
So not on this one, but in the liquor space, we like Allied Blenders. I think this company has done very well in the last 1 year. They've been able to increase their margins by about 500 bips. And largely because of the fact that they are looking to sort of up the prestige and above category. I think it's about 40% as of now, and going forward the next 2 years, they are looking to sort of take it to about 50%, say by FY28. And which is why while the top line growth could be mid-single, could be low double digits, but the bottom line growth could be far more attractive. We are expecting about 30% kind of a growth. So I think Allied Blenders is something which we like. Again, on the premiumization, which is what most of the liquor stocks are heading towards.
Okay, so that's with regard to a couple of those counters. ITC Hotels posted numbers as well. Anushi here with that take with regard to ITC's numbers.
Hi Harsh, so what we are seeing is basically in line sort of numbers, which is better than what the street had anticipated for, to be honest. Now revenues and margins we are looking at is in line with what the expectations were. Even the consumption cost and other expenses were lower as compared to the last quarter, which aided to the margin profile with the margin uptick that we are looking at, and higher other income also playing into the factor of better net profit growth that we are seeing. In fact, quickly walking through these numbers, a 16% of a revenue growth that we saw at 816 crore, while EBITDA was up over 19%, and and this is with margins expanding to 30% as compared to 29.2%. So basically in line sort of margins as well. Net profit 54% of a growth that we looked at, again aided by higher other income here. If we saw consumption costs as a percentage of revenue, that stood at 10%, while other expenses stood at 37% as a percentage of revenue. The company also approved capex of 328 crore in the first quarter, and this is for construction of a hotel that we are seeing in Andhra Pradesh. Earlier, the brokerage notes that they had come out, they expected a strong revenue growth to continue, and this is with better margins, which is something that we did see play out in this quarter as well. More emphasis would be on details would be awaited for the room rates, which are expected to clock in about 10 to 11% of growth as per Jefferies, and even the occupancy levels is something that we should be watching out for, considering that there were geopolitical developments which took place in the quarter overall, which might have some impact on those occupancy levels. Other than that, the wedding dates were also comparatively lower, so that was also another focus area. So this is the overall picture that we're seeing for ITC Hotels.
Right, ITC Hotels, of course, numbers out, stock perked up 4% post those numbers. Strong set of numbers, you can see the kind of spike on that stock. But Tech Mahindra is the other one in focus on the back of numbers. Jasmeet is here. What can we expect from the numbers, Jasmeet?
Right, the street is waiting for the results coming this evening. While let's understand what to expect from the results. Here's a preview for Tech Mahindra. Firstly, the revenue guidance we look at. The revenue is expected to rise by 0.2%. On the other hand, EBIT is expected to rise by 7%. The interesting thing to watch out will be the margin guidance, given that management wanted to reach to a margin guidance of 15% by FY27, while back in FY25, the margin guidance were at 9.6%. So the commentary on that was something interesting to watch out for. While on the other hand, the brokerages are expecting the deal wins to be in the range of 600 to 800 million. So that's something to keep an eye on. When you look at the key highlights of the company and what to expect from the results, while the Nuvama says company could face a seasonally weaker quarter, while on the other hand, BofA expects the deal win to maintain the current span, while the high-tech vertical and seasonality in the communication department could see pressure as per Jefferies. Now, the stock still remains a top pick by Motilal Oswal and HSBC. Now, what to watch out on the management commentary would be, firstly, trends in the banking and healthcare sector going forward. Secondly, the update on margin expansion program. And lastly, the client spending behavior in the communication chain. So this is the thing to watch out for going forward for the results.
Okay, so that's with regard to Tech Mahindra, what to expect. But Pankaj, do you like ITC Hotels and do you like the numbers that have come off it?
Oh, yes. I think given the fact that May was supposed to be impacted because of geopolitical issues, I think that means that the April and June month numbers have been good. So overall, the company has come out with a better set of numbers. I'm yet to sort of break that number into ARR and other occupancy numbers. But for the next 2 years, we are expecting about 15% kind of a top line growth for a company like this, and about 28, 29 odd % kind of a growth in the bottom line. So ITC Hotel is half of the size of, say, Indian hotels. And our sense is that it has still some room to sort of catch up compared to Indian hotels. So relatively, we prefer ITC hotels more as of now compared to Indian hotels.
Okay, Shivangi, last quick question with regard to a TechM. Do you have a view?
Talking about the IT space, if I look at TechM, this one has witnessed a good short covering move in today's session, but it is still trading below its key exponential moving average. So, on this one, I would wait for it to cross 1620 levels for the next momentum to begin. And because it is still making lower top, lower bottom on the weekly basis, which might suggest that pressure is intact at the higher levels.
Okay, wait and watch with regard to our TechM. Completely out of time, unfortunately, both of you. Thank you so much, Shivangi and Pankaj, for joining us this afternoon. We'll let you go on that note. Let's look at where the Nifty is settling in at in the last minute or so of trade for this Wednesday afternoon. We're absolutely flat. 25K just about holding, if I can call it, or maybe losing it 25,200, just about holding. Let's look at the intraday chart on the Nifty as well, because the recovery from the low is what was impressive. We've come off the highs of the day for sure by around 50 odd points. We've traded in a 130 point band through the day. Let's look at the heat map on the Nifty 50 as well. And within that, IT is one pocket which stands out. SBI is the other one. M&M doing well as well. But outside of that, IT and a little bit of FMCG is what we are seeing. The breadth has worsened as the day has gone by, or rather over the last hour or so. And what we're seeing at the bottom, Shriram Finance, Eternal, Sun Pharma are just some of the names. So Pharma, a couple of those pharma names, Cipla, Sun, under some bit of pressure is what we're seeing. Let's look at it sectorally, and likely we'll see a similar texture. At the very top is the PSU banking index, 1.7% higher. IT2 around 0.6. Realty was up around 0.5%. Auto also seeing some bit of tailwind. M&M was the top gainer, 0.5% higher on the Nifty auto index as well. The pharma index is down around 0.4 odd percent. Metals down half, and the defense index is the top loser in terms of sectoral indices. Let's look at the breadth and let's see how that has shaped up and if it has worsened. It hasn't actually, not materially at least, around 3:2 in favor of the advances in trade today. Let's look at the mid cap and small cap indices, and within that pack, flat on the Nifty mid cap. We've seen a bit of a fall in the last few minutes of trade on the mid cap index. Small cap also, but relatively better off, around 0.1% higher. So largely in line with the Nifty is at least the mid cap. The small cap, slight bit of outperformance we've seen on this. The top gainers, top losers, let's quickly pull them up. The BSE 500. There you go, Network 18, but Mass Financial 9% higher, Patanjali 6% higher, so a couple of those stocks really doing well. Shoppers Stop also within that consumption pack up 6%. Sammaan Capital up 4.5%. Among the losers, Just Dial on the back of numbers, nearly 5% lower. Amber, we did a bull versus bear perspective on that one. ICICI Pru on the back of numbers. PB Fintech down 2.5% and Aptus Value 2.5%. Aadhar, on the other hand, within that housing finance space, was up 5% in trade. Let's look at what to watch out for, and there will be plenty of earnings, mind you, as we start to move more and more closer to peak earnings. But those are some of the macro factors to look out for. Those are some corporate adjustments, dividend adjustments on your screen. Nothing material out there, but those are the numbers. Wipro, Axis Bank, 361 WAM, CEAT, Clean Science, HDFC AMC, Heritage Foods, Indian Hotels, and Geo Financial, LTI Mindtree, Newgen Software are just some of the names. Nuvoco Vistas, Polycab will be the other big one. Route Mobile, Shoppers Stop. And Shoppers Stop has seen a buzz in trade today as well. Suntech Realty, South Indian Bank are the other one. SNW as well. Tata Communications, and closing it up with a Wari Renewable. Mind you, these numbers are for tomorrow in trade. So keep that in perspective. These are not numbers that are going to come out today, and likely on open tomorrow there'll be another set of numbers which will react. But of course, some of these numbers will come in market tomorrow or post market tomorrow. So just something to keep in mind. Completely out of time on India Market Close. From Neeraj, myself, everyone who puts the show together, thanks so much for watching. Stay tuned to NDTV Profit. Market Express will take the action forward.
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है। बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So Dalal Street saw a choppy session of trade as investors digested a series of global cues. Nifty ends the day above 25,200 level. Sensex gains 50 points. Most sectors ended in the green. PSU banks and IT were the top gainers. On the flip side, defense and metal were on the back foot. DB Corp's Q1 of FY26 results reflect a tough quarter for the media giant. Consolidated revenue fell 5.16% year-on-year to 559.4 crore rupees, down from 589 crore rupees, driven by a decline in the printing business, while the radio segment stayed flat. So EBITDA dropped 32.79% to 110.5 crore rupees, with margins contracting 812 basis points to 19.75%. Now net profit also slid 31.4% to 80.8 crore rupees, nearly 81 crore rupees from 117.8 crore rupees. Now the stock is down 2% today, signaling investor caution. DLF is back in Mumbai's real estate scene with the West Park Phase 1, a premium residential project in partnership with Trident Realty, approved by RERA. So spanning 57,510 square feet, it launches 416 flats across 4 towers with a starting ticket size of 6.5 crore rupees, targeting completion by June 2032. So Kotak estimates sales of 2,000 to 2,500 crore rupees after exiting Mumbai in 2012 by selling a lower Parel plot to Lodha for 2,700 crore rupees. So DLF's return follows its Q1 of FY26 success with 11,000 crore rupees from DLF Privana North. Godavari Biorefineries was buzzing away in trade after the company secured a groundbreaking patent from the China National Intellectual Property Administration for 5-hydroxy-1 and 4-naphthalene-dione, a novel compound for cancer treatment. So this patent covers a new class of compounds showing strong inhibitory effects on the cancer cells. Now the breakthrough strengthens Godavari's position in innovative biopharma solutions, marking a significant step in the global cancer research. Biocon is also making waves with US FDA approval for Kirsty, its insulin aspart, the first interchangeable biosimilar for Novolog. Now, with Novolog's 2024 sales hitting $1.2 billion, Kirsty taps into a massive market, especially amid Novolog shortages as Novo Nordisk shifts focus. Now, analysts also project Kirsty's annual sales at $80 to $100 million, positioning Biocon to capture significant demand in the diabetes treatment space. JTEKT India is set to raise up to 250 crore rupees through a rights issue of fully paid up equity shares as approved by its board on July 15th of 2025. Now the funds will fuel the construction of infrastructure for a new production facility, capex for equipment and machinery at its Dharuhera, Haryana plant and repayment of borrowing. So as India's largest steering systems manufacturer serving giants like Maruti Suzuki, JTEKT aims to bolster its manufacturing capabilities and financial strength. Spandana's Spurti Financial is set to raise 400 crore rupees through a rights issue of partly paid up equity shares approved by its board on July 15th. Now, the board will meet again on July 18th to finalize the key details, including issue price, entitlement ratio, and record date as part of a broader 750 crore rupees of FY26 equity plan. So despite the recent challenges, including a quarter for FY25 net loss of 434 crore rupees, this microfinance leader aims to strengthen its capital base to fuel rural lending growth. CLSA maintains high conviction outperform on Dixon Tech with a 19,000 target price. The brokerage firm believes that the recent acquisitions and joint ventures will lift the value addition to 45 to 55%, up from 15 to 17%. Now, these moves expand margins by 150 to 200 basis points and unlock new revenue streams. Even if domestic market share stabilizes, Dixon continues to deliver robust bottom line growth. HDB Financial faces a tough Q1 with more negatives than positives. Asset quality weakens as NPAs and credit costs rise, dragging down profitability. So provisions remain elevated. However, the worst seems to be behind. Margins begin expanding and operational focus remains on stabilizing return on assets. The Q2 is expected to be a turning point as seasonal softness fades and growth momentum builds. Yield improvement and cost management offer glimmers of recovery. ICICI Lombard delivers a profit beat helped by strong investment income. Though growth remains tepid, rising commissions and a higher combined ratio reflect underwriting pressure driven by loss ratios. Health segment also shows improvement led by group business. ICICI proves Q1 sees value of new business and AP broadly in line with the estimates. Margins show a slight positive tilt with management commentary holding key importance for the outlook. Morgan Stanley maintains an equal weight rating on ICICI Lombard with a target price of 1,855 rupees. So the company's PAT beat estimates driven by higher investment income from the capital gains. While MS appreciates the profitable growth focus, it also sees limited upside at 36 times FY26 end of the PE due to weak top-line growth. So competitive intensity remains high and uncertainty around motor target price rates hikes continue to cloud the outlook. Tesla launches the Model Y in India, price between 5.99 to 6.79 million, that is close to 62 lakh rupees. Now, Citi sees limited impact on Mahindra XEV9e demand, citing distinct product positioning and non-overlapping customer segments. So, however, if import duties drop or local manufacturing begins, Citi warns that competition could intensify for the Indian OEMs. Morgan Stanley sees limited impact from Tesla's Model Y launch on domestic OEMs with prices above 5 million. Now, Tesla targets a niche, just 1% of India's car market. Domestic players have no exposure to this premium segment and EV ASPs remain below 3 million. So, given Tesla's high pricing and gradual ramp up, Morgan Stanley expects minimal disruption to the Indian automakers. Daulat Capital initiates a buy rating on Globus Spirits with a target price of 1,600 rupees, implying a promising upside of 55% from the current levels. So the firm highlights that a significant transformation is underway, driven by potential 5 times EBITDA growth in the manufacturing segment. Globus Spirits' country liquor segment is also both a cash cow and a growth engine, while branded Indian-made foreign liquor, particularly premium and above categories, represent a strong structural growth and price to earnings re-rating lever. So this combination is expected to fuel robust growth and valuation expansion for the company. Geojit Financials reports muted numbers for Q1 of FY26 with a 15.5% decline in the revenue to 153 crore rupees, primarily due to a slowdown in wealth management. However, revenue from other services shows a moderate uptick. Despite the top-line challenges, EBITDA improved significantly by 38.6% to 36.64 crore rupees, with margins expanding by 900 basis points to 24%. Net profit also declined sharply by 37.4% to 28.67 crore rupees, reflecting pressures on overall profitability. So the results highlight a mixed quarter for Geojit as the company navigates headwinds in its core wealth management business. Just Dial reports a strong Q1 with healthy growth across key metrics. Gross services value rises 6.2% to 298 crore rupees, while EBITDA grows 7.2% to 86.4 crore rupees. Now, net profit jumps 13% to 160 crore rupees, significantly aided by other income, which hits its highest level in the last 8 quarters at 127 crore rupees, which is up from 86.8 crore rupees. So margins improved by 30 basis points to 29%. The company boasts robust cash reserves of 5,400 crore rupees, representing 68% of its market capitalization. So Just Dial continues to attract a large audience, recording 193.2 million unique visitors in the Q1 of FY26. Overall, the quarter marks a significant profit increase for the company. Citi maintains a buy rating on Just Dial, but cuts its target price to 1,100 rupees. The brokerage expects a sale CAGR of 7% between FY25 to FY27. So Citi highlights that the market is awaiting clarity on the company's plan to utilize its 5,400 crore cash reserves. Just Dial achieves a strong 12 to 15% growth in the unique visitors during the second half of FY25. Now, moving forward, Citi emphasizes that continued user traffic growth will be critical for the company's pricing power and future performance. Tech Mahindra's Q1 of FY26 results are in focus as analysts project a 42% year-on-year surge in the net profit to 1,189 crore rupees, with revenue inching up 0.2% sequentially to 13,411 crore rupees. EBIT is also expected to rise 7.17% to 1,476 crore rupees, boosting margins by 51 basis points to 11.01%, driven by Project Fortius efficiency. So despite the seasonal weakness in the Comviva and high-tech segments, deal wins are set to shine, with Citi and Jefferies estimating a TCV of $600 to $800 million. State Bank of India is set to launch a 25,000 crore qualified institutional placement, or the QIP, likely as soon as this week. So the shares are expected to be offered at a 2 to 3% discount to current market prices, which stand around 819 rupees. Now, this will be SBI's first major equity raise since 2017. And aims to strengthen its capital base, targeting a common equity tier 1 ratio of 12% by March 2027. So Life Insurance Corporation of India is expected to be a major investor, potentially bidding over 5,000 crore rupees alongside strong domestic mutual fund participation. Now, this capital raise will support SBI's regulatory capital requirements and future loan growth, while reducing the government's ownership stake in the lender. So the QIP is set to become the largest share sale via this route in India. Coffee Day Enterprises is in focus, with its stock surging 17% in just 2 days. So a move driven primarily by renewed investor interest. The buzz is fueled by renowned inventor Dolly Khanna acquiring a 1.55% stake in the company as of June 2025, signaling confidence in the Coffee Day despite its fraught financial history. So IDBI had subscribed to 1,000 non-convertible debentures in 2019, And by 2020, IDBI trusteeship issued a default notice to Coffee Day for 228 crore rupees. Since that pivotal NCLT ruling, the stock has gained a remarkable 88%. So however risks remain, the company recently disclosed defaults on the payments and interest amounting to 372 crore rupees, while investor optimism is palpable and the legal clouds seem to be clearing. Coffee Day's financial challenges and the resolution of its defaults will be decisive for its future trajectory. Diffusion Engineer secures a significant domestic order worth 48 crore rupees for supplying high-pressure grinding rolls to the cement industry. The order will be executed over the next 11 months, providing a steady revenue stream through this period. So the contract highlights company's expertise in the manufacturing critical heavy engineering machinery and its expanding footprint in key industrial sectors. So as of March 2025, Diffusion Engineers hold orders in hand totaling 203.2 crore rupees. State-run telecom firm MTNL has defaulted on 8,585 crore rupees in the principal and interest payments owed to 7 public sector banks. The company disclosed to stock exchanges Union Bank of India and the Indian Overseas Bank have the biggest exposure, followed by Bank of India, SBI, PNB, UCO and Punjab Sind Bank. So MTNL's total debt now stands at 34,484 crore rupees, including bonds and government loans. So the mounting default deepens concerns about the viability of MTNL and puts further pressure on the PSU banks. Maharashtra has signed green energy deals worth 31,955 crore rupees with 4 companies to build 6,450 megawatt of pumped storage hydro projects across the state. The agreements announced by Chief Minister Devendra Fadnavis aim to boost grid stability, create 15,000 jobs and support the state's clean energy goals. So projects will come up in the districts like Shambhajinagar, Chikaldara, Kolhapur and Ratnagiri, with companies like Greenco, Adani Hydro, Ritwik and Waterfront involved. So these storage projects act like giant batteries, storing energy and releasing it when needed. Andhra Pradesh is stepping up efforts to become a top tourist destination, setting an ambitious target of attracting 25,000 crore rupees in the tourism investments. So State Tourism Minister said that the government is working to add 50,000 hotel rooms with a focus on beach tourism, temple circuits and heritage sites like the Gandi Kota and Surya Lanka. So the state is also speeding up project reports under central schemes like the Prasad and Swadesh Darshan to tap into the national funding. According to media reports, Google has signed a $3 billion 20-year deal with Brookfield Asset Management to power its US data centers with clean hydropower. The agreement begins with 670 megawatts from 2 upgraded Pennsylvania plants and could scale up to 3 gigawatts as new capacity is added. Now, this is the largest corporate hydropower deal ever and supports Google's push for carbon-free energy and rapid AI and data center expansion. India has hit a historic green milestone, achieving 50% of its power capacity from non-fossil fuels 5 years ahead of its 2030 Paris Agreement target, with 242.8 gigawatt of clean energy out of 484.8 gigawatt total capacity driven by solar, wind, hydro and nuclear. India's renewable output surged in 2025, while coal generation dipped nearly 3%. So Union Minister Prahlad Joshi hailed this as a proud moment, crediting PM Modi's leadership. India now eyes 500 gigawatt of non-fossil capacity by 2030, solidifying its global clean energy lead. A Prada team visited Kolhapur, Maharashtra to engage with artisans crafting Kolhapuri chappals after backlash over the cultural appropriation. Now, the Italian fashion house faced criticism for showcasing sandals resembling the GI-tagged footwear in its Spring or Summer 2026 Milan show without crediting their Indian origins. Priced at 1.2 lakh rupees, the sandal sparked outrage for ignoring the craft's heritage. The team, including footwear division experts, studied traditional methods and discussed the collaboration. A second visit is planned for August. Prada aims to launch a made-in-India Kolhapuri-inspired collection, fostering ethical partnerships with local artisans. Ola and Uber drivers across Maharashtra went on strike, converging in Mumbai to demand fairer fares and other key reforms. Thousands gathered at Azad Maidan for the protest, which also included the gig workers from food delivery apps. Now, reports indicate that the striking drivers in the Mumbai metropolitan region allegedly stopped cabs and autos mid-journey, forcing passengers out and disrupting the services. So the protesters have 5 main demands. They want rationalized fares that match the meter cab rates, a strict ban on the bike taxis, a cap on the new cab and auto permits, and the activation of a welfare board for drivers, along with the implementation of the Maharashtra Gig Workers Act. Air India will partially resume international flights starting August 1 after grounding several routes following the tragic crash of flight AI-171 on June 12th. So the airline is bringing back select long-haul services, including the Ahmedabad-London Heathrow route, which will operate thrice a week. Flights to Paris, Milan and New York will also gradually restart in a phased manner through September. Now, a full restoration of international operations is expected by October 1. The Karnataka government has issued a draft notification to cap movie ticket prices at 200 rupees, including entertainment tax. Now, across all theatres. So, from single-screen cinemas to premium multiplexes, the move aims to make cinema more affordable across the state. Authorities have opened a 15-day public consultation inviting objections and suggestions before finalizing the amendment. US President Donald Trump adds that India is working along the same line, suggesting similar access could be secured. Trump emphasizes that the US previously had no entry into these markets, but says that his tariff strategy is now opening doors for American businesses. US President Donald Trump says pharmaceutical tariffs are likely by August 1, starting low and ramping up over time. This marks a shift from his earlier timeline of 12 to 18 months. Trump aims to push drug makers to reshore production, warning that tariffs could eventually reach 200%. Well, with that, viewers, it's a wrap on Market Express, but please stay tuned as Sanjana Chauhan takes up Profit 360 on the other side of the break.
Right now across the world, even in Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What?
Benchmarks end almost flat with a slight upward bias. Most indices finish in the green, led by the PSU Bank Index as the top sectoral gainer. Small and mid-cap indices advance for the third consecutive session. The race to insure Tesla cars in India is intensifying, with multiple insurers competing for partnerships, while Bajaj Alliance and ICICI Lombard have reportedly shown interest in tying up with Tesla. SBI is in the spotlight for major fundraising initiatives. According to sources, the State Bank of India is set to launch a 25,000 crore qualified institutional placement. Separately, SBI's board has approved raising up to 20,000 crore via bonds to further bolster its capital base. Commuters hit by Ola and Uber drivers strike in Mumbai as they demand fair regulation and protest against the high commission rates charged by cab aggregators. PVR Inox closes 1% lower after Karnataka's proposal to put up a 200 rupee cap on movie tickets across theatres, including multiplexes, and on all language films. It's an NDTV Profit impact. NSE puts out a circular against unregistered advisory entity named Close Friends Traders after we reported that the firm claimed intraday margins up to 500x and zero brokerage. The Prada team meets with the artisans of Kolhapuri Chappal following the global controversy to explore a collaboration with them. Bombay High Court dismisses the PIL against Prada. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's get right into it and take a look at how the markets fared today. The markets ended flat with a positive bias after rebounding from early losses. Most indices barring metal, defense, pharma and finance closed higher. PSU Bank Index was the top gainer, followed by Nifty Media. But for more on this, let me quickly go across to my colleague Harsh for a quick wrap of the day's market action.
Well, the Nifty closed as flat as it can get. 25,200 is where we've closed at, and it was a bit of a choppy day of sorts. We fell a bit at the start of trade, and thereafter we bounced back, went towards 25,250. And thereafter fell another 50 points and closed at around the 25,200 mark. So that's how it played out. Around 130 points is the band in which the Nifty traded in. In terms of stock price action, auto did well, and you had an M&M at the which stood out in trade, one of the top gainers on the Nifty. The IT index was the other one, with a decent set of stocks sitting in the green. So that one did well as well. And then SBI led some of the PSU banking counters higher. And the PSU banking index, in fact, was the best performing sectoral index in trade today. So on a day like this, PSU banks really standing out. And SBI, on the back of that 25,000 crore QIP that it's set to close, is what has driven the PSU banks higher. So that was the larger texture. The breadth, meanwhile, within the Nifty 50 remained unfavorable, in fact, and we just had about 20 gainers for 30 losers on the Nifty 50. So that's how at least it played out on the top 50 counters. Now let me take it to the broader markets, and the advanced decline was was decent. The breadth was decent, 3:2 in favor of the advances, but nothing too convincing per se. The Nifty mid cap was absolutely flat. The Nifty small cap just a 1/5% higher. So that's the way the moves were. In terms of losers as well, metals was one pocket, just a wee bit. Pharma was the other one where there was just a little bit of lack of conviction in trade today, but those were two pockets which closed in the red nonetheless. Nothing major per se, but still closed in the red. In terms of BSE 500 top gainers, top losers, some consumption names, a Shopper Stop stood out, a Patanjali stood out. We did see some of the auto names stand out as well, but not within that BSE 500 basket. Some names, some lenders, and Avas was sitting in the red, nearly 2.5% lower. And then you had an Aadhar, which was 5% up. A Mass Financial was up nearly 10% in trade. So those were some of the names as well, which did well in trade.
Global trade tensions and investor uncertainty continue to dominate headlines. We caught up with Vinay Jaisingh, CIO and Head of Equity Advisory at Ask Private Wealth to understand how India is positioned. Let's listen in to what he had to say.
Valuations are not as attractive, but India's resilience clearly is great. If you look at the incremental GDP India is adding on to the world, it's somewhere to the tune of 10 to 20% based on the world growth being 1 to 2%. Take an average number of 15% of the incremental world's GDP coming in from India. That's a very big sign. In terms of profit pool, it's just 1.5, 1.6%. And in terms of inflows, last year was negative, but average is about 1.5%. So you can see a lot of inflows come into the country. Second point, if you look at indices, most indices in emerging market have moved India up from 6-7% to as much as 18%. And at the same time, if you look at the data of Indian FIs in the shareholding pattern, that's gone down from a peak of 20 to 16, again, a 12 to 14-year low. So, this also gives you the fact that, FIs are underowned the country and the GDP is growing pretty well. One last indicator, which is very pro-India, is if I had to just look at the 10-year interest rate of India versus the rest of the world, or let's talk about US currently. 6 years ago, it was 6%, the interest rate differential between India and US for the 10-year. Today, it's as low as 1.8%. So it also tells you the risk premium for India has come down substantially.
And now on to an NDTV Profit research special. For years, the large cap IT giants have dominated the market, but there is a definite shift underway. My colleague Sajith has been digging into the numbers and his analysis shows that mid-cap IT stocks are winning the race. Are mid-cap IT stocks overtaking large cap stocks? Let's find out. My colleague Sajith here with all the details.
The IT sector is going through a rough patch, and if you look at the large companies, the two of them have already come out and spoken about a slow order intake, and that's also getting reflected in the revenue market share of these large companies. So we looked at the top 20 companies by market cap of listed companies and the kind of revenue growth they have done from FY22 to FY25, and we found that there is a shift in revenue market share from the large caps to the mid caps and the small caps there. So if you look at the companies in FY22, large caps accounted for 91.2% of the revenue share, and that has come down to 89.5. So 170 bips fall in the revenue market share for them. Mid caps, on the other hand, have gone up from 5.7 to 6.8, which is 122 basis points jump. Small cap from 2.9 to 3.4, and micro cap gaining just 10 bips more market share. But where is this shift happening? If you look at the top 20 companies, the revenue overall has grown by nearly 33% from FY22 to FY25. But the laggards for some of the companies, for the large companies is basically coming from the Wipro and the Tech Mahindra, because they have been underperforming the large caps and the sector for the last couple of years, and that's what is leading to the fall in revenue market share. At the same time, the share is shifting because it's been pulled up by companies like Persistent and Coforge, and we've seen that in the valuation and the price jump in these two stocks, and that's how it is going. From a revenue point of view, as I said, the total revenue of this cohort, went up by nearly 33%. But look at the revenue growth for the large cap is 30.3%. So it's underperforming the overall, 20 stocks revenue pool which is there. Mid caps, the revenue jump is 59.6%, small caps 51.9%, and micro caps, which includes companies like New Web and all, is 121%. So clearly there is a shift in the revenue market cap, and that's what we're hearing from the some of the companies as well. Because what we are seeing there is that a lot of new clients are going for companies which are agile and nimble, and where the client can control the companies. Large companies are not, they're not able to control the large companies, and that's where there is a shift in orders flowing from large caps to small caps, especially with respect to small discretionary spends and other stuff. So the revenue gain which is coming in is for the mid caps and the small caps.
And a day after the Mumbai showroom opened in Mumbai, there is a race between insurers, with sources telling us that Tesla, the global EV giant, is reportedly in early talks with Bajaj Alliance and ICICI Lombard for potential car insurance tie-ups in India. My colleague Agni brings us all of the details on this. Agni, over to you.
Tesla might have entered India, but the bigger question that people are asking are who will be the insurance provider for the company. Sources tell us that Bajaj Alliance and ICICI Lombard are hot in the race to get into tie-ups with Tesla for insurance in their India vehicles. Now, Bajaj Alliance and ICICI Lombard are in early discussions with Tesla at this point, and no terms have been finalized yet. Sources tell us that the firms are pitching for non-exclusive tie-ups with Tesla, and Tesla sources are also telling us that the decision will ultimately depend on the insurance department working out of the company's Hong Kong or Singapore offices. Now remember, to get a license in India, to get an insurance service provider in India, Tesla needs to get a motor insurance service provider license from the IRDAI. That will take another few months is what the sources are telling us, and only then will they be able to do a proper tie-up with an insurance provider. We have reached out to Bajaj Alliance and ICICI Lombard for their comments on the story, and this is a developing point, so do stay tuned as we bring you more updates.
Right, Agni, thanks so much for that update. Meanwhile, significant fundraising moves are underway at SBI. The bank is poised to launch a massive 25,000 crore rupee qualified institutional placement, also known as QIP, in its first equity fundraising since 2017. This pricing is expected at 2 to 3% discount to the current market rate. For a comprehensive breakdown on these developments, here's my colleague Shubhana with all of the details. Shubhana, take us through the latest.
Sure. So yes, SBI is likely to issue its mega 25,000 crore QIP at a 2 to 3% discount to the current market price. The current today's shares of SBI had closed at 830 rupees on NSE, and the QIP is likely to be issued to be priced at near market levels. Now, what we are hearing is that the QIP could be launched any moment from here on. And this is important obviously because back when it had raised funds through its QIP in 2017, they had raised 15,000 crores, and the issue price was at a discount of 1% to the then current market price. And on the other hand, apart from equity fundraising, they're also raising funds through debt. The board met today and they approved raising up to 20,000 crores through debt as well, through tier 1 and tier 2 bonds in FY26. This is important because last year itself they had raised 20,000 crores through such bonds, and they had also raised about 30,000 crores through infrastructure bonds. So all of this would help SBI in terms of strengthening their balance sheets, meet regulatory environments, requirements, and also boost its equity tier 1 capital, which is what they're targeting.
Right, Shubhana, thank you so much for that update. We'll continue tracking that story and bring you all of the details. Meanwhile, Tech Mahindra results are out with its Q1 FY26 results. And for the breakdown of the data, let me quickly go across to my colleague Puneet standing by. Puneet, take us through what we can expect and more importantly, the earnings that we're seeing at the moment.
Well, thanks so much for that. So results largely seem in line for Tech Mahindra. We were expecting it, because the expectation was just about a percentage fall in terms of revenue at 13,351 crores. That number has come in bang in line with estimates. If you look at the EBIT number as well, that's also come bang in line with the estimates of 1,477 crores. Because there is a slight increase in terms of revenue, the overall margin has come in at 11.1% and 11.01% as well. But we are being joined by Sandeep Agarwal of Sovilio. Sandeep, a very good afternoon to you and thanks so much for joining in. Just in terms of the first numbers of revenue, EBIT as well as profitability, numbers seem largely in line. What do you make of it?
No, good evening. Thanks for having me on the show. So, this is a really only company which has at least given numbers which are broadly in line, and there is no big negative surprise as of now based on the headline numbers we are seeing. So, and this is on expected line because this is a turnaround story, and there are few verticals which have been languishing for 4-5 years now, and there is a leadership change. So, obviously, these numbers should be seen positively. I think within the large cap, this is the only company which has given decent number, and there is a turnaround possibility, and also some, base effect impact of some of the large verticals not doing well for 4-5 years, and there is some spend there. So I think this number should be seen broadly in line to slightly positive, I would say.
And Sandeep, the deal wins number is something that we have tracked for all IT companies at 809 million. It's coming at the higher and the upper range essentially of 600 to 800 million in terms of deal wins. It's been another quarter, because even the last time in the quarter 4 we saw that kind of positive upbeat from the company beating the guidance, and we saw in terms of deal wins the positive reaction. So at $809 million in terms of deal wins, it looks like a number that's very strong. Would you agree with the same?
Yeah, so see, not only deal wins, even the actual numbers of revenue are good. And there is a clear turnaround. The management has also been indirectly hinting towards that in the interactions. So, yes, overall, as I said, that, these numbers are broadly in line to slightly positive. As of now, there will be some more details on the con call. So, if that con call is also in line with the deal wins and there is a positive commentary, I think the stock can hold on. So, this is the only name in the large cap where there is a possibility of some good turnaround and good delta.
Got that, Sandeep. And Sandeep, one question that's been propping up across beyond the results of Tech Mahindra has been the FY27 guidance on EBIT of 15%. Now, currently it's trading at 9.7% EBIT margins in FY25, and there has been some question coming on that, but it's been over the last 5 quarters a consistent increase in EBIT margins from the 9% range to 11% now. Do you feel confident of that target of management of 15%? Of course, we'll be waiting for more comments in each and every quarter going into 15%. But currently, what is your view specifically with the management target of 15% EBIT margins, inducing that the company is already on track to get to that target of 15%?
Yeah, so, I will say 15% is a modest target to achieve, but only thing now, what is happening is that, again, the kind of disruption which we are seeing due to the new technology, the problem will be that, growth could again be tapering down for the whole sector and all the companies, and in that case, if, let's say, the management decides to have little more growth at a little compromised margin, then that 15% will look tough, because there is still 4-5% ground to be gained, which is a very tough ask. So that is my limited submission. So maybe 15% margin would be achieved, but the growth may fall down to 2-3%, 4% only. So that is something which management will take a call, and we will know more on the earnings call. But earlier it was easier. Now with the new technology disruption, I think it will not be so easy to achieve 15%. But
got that, Sandeep. Sandeep, thanks so much for joining us, giving us perspective on that. And Sandeep did highlight a few important points on deal wins as well as on something like the FY27 guidance. We'll be waiting for the management call today at 5:45 to get some more perspective. But Sanjana, numbers largely seem in line. The deal wins also at 809 million and at the upper end of that range. So largely seems in line, but we also had the press conference scheduled at 4:15 today, so let's go across to that and get some perspective from the management.
This year in Chennai, has already hosted over 60 client visits. It is becoming a true showcase of our manufacturing capability, innovative mindset, and our distinctively experienced staff. Our BFSI vertical reported a year-on-year growth of 4.7% and continues to be one of our fastest growing verticals. The marquee Fortune 500 and Global 2000 customers in financial services and insurance have engaged with us, enabled by a key differentiation in asset and wealth management, payment, and core capabilities in platforms like Guidewire and Temenos. We remain confident about our long-term potential in this vertical across all of our geographies. Our high-tech vertical declined by 3.3% year-on-year on a reported basis. This decline was driven by an ongoing restructuring in the semiconductor industry, including steep budget cuts and workforce rationalization at a key client. While these headwinds are playing out, we are strengthening our capabilities in silicon design, embedded systems, and digital product engineering. Our client engagement remains strong and anticipates a gradual recovery in the second half of this year. On a year-on-year basis, Americas declined by 5.9%, Europe grew by 11.7%, and the rest of the world increased by 2.9%, with both regions aided by favorable currency tailwinds. In our client metrics, I'm happy to report that we have added 2 clients in the $50 million plus bucket over the last year. This clearly demonstrates our ability to scale engagements and deepen relationships within key accounts. On large deals, the TCV for the quarter stood at $809 million, representing a 44% increase year-on-year on an LTM basis. Our centralized solutions team and our contract management group have yielded positive results, particularly in securing multi-tower high-value deals. Additionally, large deals over $25 million now make up a significantly higher proportion of the total large deal TCV. The deals are broad-based across comms, high-tech, BFSI, and other verticals. A few of our key wins include: firstly, selected as a growth partner by one of the USA's leading consumer wireless operators for its customer operations transformation. The designation as a growth partner unlocks the door to all future opportunities as per the client's new sourcing strategy. We've been engaged by a leading global high-tech company to help them deliver truly immersive user experience powered by their LLM platform. TechM will ensure an enriched experience for more than 2 billion users while ensuring the platform remains safe and secure. We've been chosen as a primary partner for a leading UK-based telco for a multi-service line deal to deliver and manage applications across their fixed and mobile networks. The scope includes delivering services across application services, network services, next-gen services, engineering, and digital enterprise applications. We've been engaged by a railroad customer in the US for the development and support of a portfolio of applications across multiple corporate functions of the company and across multiple technologies including SAP, Salesforce, and data and analytics. TechM has been selected by a leading global fashion apparel brand for a multi-year strategic engagement to provide digital and data transformation and support services. The scope includes SAP Fashion, Cloud, Data and AI, and Digital Commerce capabilities with a dedicated Global Capability Center or GCC to drive innovation, cost efficiency, and business agility. Overall, for our financial progress, we are beginning to see early results of the structural changes and strategic choices we have made. Our deals win momentum remains strong, and we expect this to start reflecting in our growth in the next quarter. In sum, our margin trajectory is steadily strengthening, and we are confident in our ability to build revenue momentum. Now I'll talk a little bit about talent and leadership, and this has been one of our key differentiators of our transformation journey is the formidable team that we have built up. Let me highlight some important developments on the talent front. Amol Phadke has joined us as Chief Transformation Officer and will be helping us on our progress with our go-to-market initiatives. He brings over 25 years of experience in technology and business leadership in areas like AI, cloud software, networks, and IT in firms like Google, Telenor, and BT. He will be especially useful given his deep expertise in comms. Additionally, we have seen the internal elevation of leaders into key roles, including the head of communications portfolio, head of our telecom portfolio for the Americas, and the head of our India, Middle East, and Africa business. These appointments underscore our strong internal talent bench, and they reflect our ongoing commitment to building a high-performance organization. We continue to focus on leadership development, succession planning, and creating a culture of accountability. Our people remain at the heart of our transformation story. During the quarter, we launched Tech Zenith, our flagship leadership development program in partnership with the reputed business school INSEAD. Our AI-delivered right strategy, which we unveiled last quarter, has been resonating really well with our clients. Our value lies in helping clients transition from proof of concept to production, from the sandbox to production systems. This strategy is being executed on 4 foundational pillars: transformation delivered, productivity delivered, innovation delivered, and assurance delivered. These pillars are also contributing meaningfully to our AI deal wins. We now have a portfolio of 200 plus enterprise-grade AI agents across industry segments, several of them already in use at scale with our clients. Our agentic AI offerings also include a hybrid human and agent workforce. TechM's AI consulting practice enables clients to validate ROI and to prioritize AI use cases in a systematic and efficient manner as they evaluate their AI roadmap. Tech Mahindra is well positioned to support clients effectively, enabled by a more experienced workforce that serves really as a strong enabler and key differentiator for this offering. Our 1,000 employees across the company have been trained in AI and Gen AI, including a critical mass with advanced training and certifications. From an innovation and ecosystem perspective, we hosted our first ever Innovation Day, Innoverse 2025, during the quarter in London. This is, in Bangalore. This is an internal platform to showcase and strengthen our innovation culture. It brought together teams to solve real-world challenges with speed, scale, and creativity, and really reaffirms that innovation is a core component of the TechM DNA. We organized TechM Synergy 25, our partner appreciation event this month. This was in London at the legendary Arsenal Stadium, and it was great to connect with over 125 plus partners and clients. This year's theme, Winning Together with AI, captured our shared ambition and showcased our AI-driven leadership. It also laid the groundwork for collaborative frameworks that will shape the future of our partnerships. We also strengthened our ecosystem partnerships this quarter through a few key alliances. Let me highlight a few notable partnerships for this quarter. A partnership with Nuix, a global leader in AI-powered investigative analytics and intelligence software to provide innovative, scalable solutions for cyber and fraud detection. An elevated partnership with ServiceNow to deliver next-gen broadband solutions tailored for CSPs, offering a comprehensive vertical solution stack. The launch of a new managed service offering for Cisco, Multi-Cloud Defense, a component of Cisco's hybrid mesh firewall. The new offering provides enterprises a robust cloud security solution. On the awards front, we are proud to share that we have been included as a constituent of the FTSE for Good Index Series for the 9th consecutive year. Our performance was rigorously evaluated in a few key areas, including corporate governance, health and safety, anti-corruption, and climate change. This independent assessment is a testament to our leadership in implementing robust governance practices and upholding high ESG standards. We were recognized as one of the best organizations to work for and one of the most innovative organizations by ET Now. I think altogether they underscore the investments we have made in culture, innovation, corporate governance, and capability building. In June of this year, I completed my first 2 years with Tech Mahindra, and I deeply value the warmth, energy, and the openness that define our culture. And this has really made my journey so far very meaningful. We look to retain the essence of this culture while driving continuous improvement across the organization. Many of the improvements we're driving may seem small in isolation, in systems, in processes, in ways of working, in driving focus and operating discipline. But as you know, as the theory of marginal gains teaches us, consistent progress across multiple fronts can generate transformational outcomes, as you've seen so far. We are beginning to see this play out, and we are confident that this momentum will compound meaningfully in the quarters ahead. With that, I now hand over to Rohit, who will take you through our financial performance in more detail. Over to you, Rohit.
morning, good evening, everyone, and thank you for joining us. This was introduction to CRAD. Let me start by walking you through the company's financials for the first quarter of FY26, covering the period June. We ended the quarter with revenue of $1,564 million compared to
Right, these are as the Q1 earnings for Tech Mahindra have come in a mixed performance with the margin steady. Revenue standing at 13,351 crore, just below NDTV Profit's estimate of 13,411 crore. The EBIT also coming in at 1,477 crore in line with expectations. EBIT margin was slightly better at 11.1%.
1.4% and a YOY decline of 1%. From an INR perspective, the revenue stood at 13,351 crores compared to 13,384 crores in the previous quarter. A decline of 0.2% on sequential basis and account of INR appreciation against US dollar and a 2.7% growth on a YOY basis. Our EBIT dollars grew by 30% in USD and 34% in INR on a YOY basis. EBIT margin was at 11.1% versus 10.5% last quarter. Headwinds from a margin perspective during the quarter included seasonality of our Comviva business, higher visa costs that we see in this quarter, and lower utilization based on revenue headwinds. These were offsets by savings from Project Fortius, operational levers such as favorable offshore mix, the G&A optimization, including continuous progress made on integration of portfolio entities and other levers contributing to cost efficiencies. Our effective tax rate for the quarter is at 30%. As you may recall, the previous quarter we had one-time tax refunds which normalized this quarter. We expect the tax rate to be levelized at 27% for the year. Our profit after tax PAT for the quarter was $133 million, a year-on-year increase of 30%. In INR terms, the PAT was at 1,141 crores and a PAT margin of 8.5%, an expansion of 200 basis points on a YOY basis. Our return on capital employed stood at 23.8% for the quarter, reflecting a sequential improvement of 120 basis points. On a YOY basis, the ROC improved by 600 basis points, driving enhanced profitability and disciplined capital allocation. We remain focused on sustaining capital efficiency as we work towards our stated F27 target. We generated 86 million of free cash flow during the quarter, which is lower, reflecting the usual seasonality that we see in the first quarter of the financial year. This was also impacted by a 7-day increase in DSO, primarily due to timing-related collection delays and further affected by cross-currency movements. We expect this to normalize in the coming quarter and remain focused on improving our working capital efficiency, which we've delivered quarter on quarter consistently for the last 3 years. As of June 30th, our hedge book stood at 1.64 billion compared to 1.96 billion in the previous quarter. We've adopted a more prudent approach, particularly in respect to entering long-term hedges, reflecting the current volatility in the global currency environment. Based on the hedge accounting, the mark-to-market loss for the quarter was 9.3 million, out of which 3.9 million loss was taken to P&L and the 5.4 million went to reserves. Our total deal wins for the quarter stood at 809 million, reflecting a growth of 44% on LTM basis. As Mohit highlighted earlier, we continue to improve our deal win ratio, which is a testimony and a trust the clients are placing in us in terms of our value proposition. More importantly, these wins are broad-based across multiple verticals. We made a good progress over the past few quarters as a part of our margin improvement program. This is driven by a resolute operational strategy, focus on profitable growth and disciplined execution. As we shared during the last quarterly update, we remain on track to achieve margin improvement in line with our stated goal of F27. With this, I now hand it back to Abhilasha for next segment.
Thank you, Mohit and Rohit. We will now conclude the stream for those of you who have joined us on social media. Thank you everyone for joining us. We will now open the conference for a quick Q&A session for media friends who've joined us virtually as well as present here. We'll be taking questions alternately, So those of you who have joined us virtually, please post your questions in the chat box. We can take the first question here. If you can just state your name and the name of the publication, someone will come on and hand over the mic.
Hi, this is Aishwarya from NDTV Profit. So first question is based on the US market. Management has guided for 15% for FY27. Currently the margin stands at about 9.6% as per FY25. What does the road ahead look like for Tech Mahindra?
I'm happy to tell you that we hit 11.1 this quarter, so steady progress, as Rohit mentioned, for 7 quarters running, and we remain confident that we will very much meet the 15% benchmark that we have set for ourselves for FY27. While we did see a slowdown in certain parts of the US business, specifically on a year-on-year basis, the auto business, or some slowdown in the high-tech, we did see growth in other parts, right? We saw growth in our Europe portfolio, we saw continued growth in our Asia Pacific and Japan businesses. We remain confident about the long-term goals that we have set for us. Not just so long-term now, it's 18 more months to go.
Right. Hi, Mohit, this is Sumita from ET Now. I have a couple of questions when you say that, the macro environment remains uncertain, but when you talk about the deals, will you be able to, or will the company be able to sustain the momentum?
We certainly think so. Look, I think over the past few quarters, we have been reporting steady and increasing deal wins. We do see a robust pipeline. We do see the fact that we are able to convert these deals. But as we've always shared, our focus is very much on doing profitable deals rather than doing deals for the sake of reporting. But for now, at least for the next couple of quarters, we do see a consistently strong pipeline, and we continue to remain confident about our ability to close them out.
Just one more question on trends in client addition, especially in the $100 million, $50 million client buckets. Do you anticipate a sustained momentum?
Well, look, I think, like we said, we have added 2 $50 million clients over the past year. Again, I think on the whole, and we've done this analysis obviously on an ongoing basis, our largest clients are growing much faster than the company average, and so we remain confident about our focus on our largest clients and our opportunities to grow them.
That's right, a mixed quarter for Tech Mahindra, while margins hold steady and EBIT have in fact met expectations. Let's take a quick break right now, but more on the other side of this very short break on Profit 360.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहां तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
I went to IIT Mumbai, Sundar Pichai went to IIT Kharagpur, but there is another colleague of mine and he went to IIT Mumbai. He is releasing a book, it's a biographical account about him and how he has used the principles of the Bhagavad Gita and ancient Vedic spirituality to apply in his corporate career, which was quite centered around swinging markets which are not at all in equilibrium, as you know. And he went to the same hostel as mine, Hostel 6.
And who is this?
imports become the exception rather than the norm. And increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. DLF is making a high-profile comeback to the Mumbai market with the launch of its premium residential project, the West Park Phase 1 in Andheri West, in partnership with Trident Realty. This marks DLF's first large-scale residential development in Mumbai over a decade, signaling its renewed focus on the city's luxury segment. Anushi brings in more details on this.
Stock in focus in the real estate space would remain DLF, and this is on the back of its big project launch in Mumbai, marking its re-entry into the region again after almost a decade. Now DLF is set to launch the West Park Phase 1 project tomorrow is what we are looking at the timeline, and this is with a build-up area of 57,000 square feet. The company in partnership with Trident Realty for the same, and this project is to be expected to be completed by June 2032. Now this project is being developed in multiple phases, which includes 416 flats across 4 towers in the current phase that we are looking at, starting ticket size being in the range of 6.5 crore. Now this marks an interesting debut in its MMR region again, since its earlier history as well. The company had acquired a 17-acre mill land plot for 700 crore in Lower Parel in 2005, but because of the global financial crisis and other factors, it had to eventually sell this land parcel to Lodha developers in 2012 for a consideration of 2,700 crore. Now with this, the company did also point out the overall picture in terms of where the pre-sales and the launch pipeline could be looking like. If you look at the DLF Privana North, it recorded around 11,000 crore sales. With this Mumbai launch, it expects over 2,000 to 2,500 crore of sales. So with this, we are seeing a strong guideline in terms of where the pre-sales number were. FY25, the number was 21,000 crore. This is the expectation that is there for this FY26 as well, 20 to 22,000 crore. So whether there would be an upward revision in the guidance is something that we should be watching out for. As far as where the launch pipeline is covered, turnover is concerned, 17,000 crore is the number that we are looking at, which includes the likes of DLF Privana North, Mumbai as well as Goa as well. So this is the overall picture that we are building in for DLF. It's an interesting day we should be watching out for, considering its entry back in the Mumbai market.
Moving on, Mahindra IVF is making another attempt at its IPO, having confidentially refiled its draft prospectus with the SEBI after previous withdrawal earlier this year. NDTV Profit had earlier reported that the withdrawal came after SEBI flagged concerns on founder Ajay Murthy. My colleague Agni joins us with more details on this.
Right, so Mahindra IVF has confidentially refiled for its IPO yesterday. Now remember, this is 4 months after the company originally withdrew its IPO plans, which was again filed through the confidential route. Now the company had told us in an email response back then that they had withdrawn the IPO due to market conditions, and there was no clarity as to when the IPO will be reattempted again. But NDTV Profit had brought to you that the IPO was probably withdrawn after the SEBI scrutinized a release of a Bollywood movie based on the founder Ajay Murthy, the biopic which was called Sanam Teri, the biopic, and remember, the biopic had been produced by Ajay Murthy's sons, and SEBI was of the opinion that a biopic promoting the founder and the company at a time when the company's financials and company's business structure was not disclosed to the public was too much of a coincidence. With the heat of the SEBI on the back of the company about an ill-timed movie on the founder, the company finally decided to withdraw its IPO 4 months ago. This was again brought to us by sources, and today we see the next step of it going forward at a time when the primary market is buzzing with activity. Remember, the company was originally looking to raise around 3,500 crore through the IPO, and we don't know yet how much of that will be materializing in this second attempt, but as procedure, once the confidential papers are approved, the company has to file an updated DRHP publicly. So do stay tuned, as and when that happens, we will bring you more updates.
Right, Agni, thank you so much for that update. We'll continue tracking the journey of Mahindra IVF as they're eyeing another IPO. Now, moving on, a full-page ad in a Hindi daily has sparked a market watchdog alert. NSE has cautioned investors against a Delhi-based unregistered advisory firm that's been running unauthorized stock market services for 16 years. I'm sorry, the firm claimed wild intraday margins of up to 500x, zero brokerage and astonishing returns, all without SEBI registration.
Leading boards of the country, National Stock Exchange has come out with a circular saying and cautioning the investors against, getting lured by schemes such as the ones shown in a Hindi daily newspaper sometimes back. Now, this release came after NDTV Profit ran a story about several falsified claims made by unregistered entity called Trading Dost in a Hindi daily. Now, we must understand that NDTV Profit also had a telephonic conversations with the representative of this particular unregistered firm, and we got to know that this is something that is operating from Delhi, specifically the Shadra region. We were also told by those representatives that they have been running the operation since the last 16 years, and this is not something that they are only doing. It is something that is being done by thousands of entities both in India as well as globally. Now, we must understand that it is after this particular report that NDTV Profit came out with, talking about how many years this has been going on for, and that several other players are also into it, and looking at the audacious nature of the front page ad that was run in a Hindi newspaper, the National Stock Exchange, the leading boards of the country, also came out with a circular yesterday night talking about how investors must protect themselves by not engaging with such schemes. So let's see how further developments on such cases roll out, because as we exclusively reported some time back, several YouTube channels, Telegram channels and other social media platforms are used to lure investors into such schemes, and it is something that the SEBI as a regulator is also investigating and is also concerned about because of the enormous volume of such instances. So let's see how the regulatory crackdown on these things continue and how many of more such stories we can look at, because clearly volume is the issue.
Right, Charu, thank you so much for that update. We'll continue tracking this story and bring you a detail. Don't forget to catch the story at 7 o'clock later this evening with all of the updates. Moving on, in a significant development following the global controversy over Prada's Kolhapuri-inspired sandals, a high-level team from the luxury fashion house has arrived in Kolhapur, Maharashtra today to initiate groundwork for a potential collaboration with local artisans. The visiting group, comprising Prada's core technical team, is currently in the city to evaluate the traditional production process of Kolhapuri chappals. Prada designers are expected to spend the evening meeting with artisans, cooperative heads and stakeholders to understand the intricacies of the craft. The team departs tomorrow morning. Let's listen in from Lalit Gandhi from Maharashtra Chamber of Commerce and a Kolhapuri chappal artisan.
कोल्हापुरी चप्पल की जो उनके रैंप वॉक के बाद कंट्रोवर्सी तैयार हुई, उसके बाद में महाराष्ट्र चैम्बर ऑफ कॉमर्स से प्राडा से संपर्क किया था कि ये कोल्हापुरी कला है, ये भारत की कला है, इसको उन्होंने एक्नॉलेज करना चाहिए। उन्होंने लिखित स्वरूप में इसे मान्य किया, एक्नॉलेज किया और उसके पश्चात ये कोल्हापुरी चप्पल कोल्हापुर के कारागिरों से सीधे प्राडा खरीदी करे, जिसका फ़ायदा यहाँ के कारागिरों को। ऐसी भूमिका चैम्बर ने उनके साथ हुई वीडियो मीटिंग में रखी थी। प्राडा ने हमारी विनंती स्वीकार करके आज प्राडा की ग्लोबल जो टेक्निकल टीम है वो कोल्हापुर में आई है। उनके ग्लोबल डिज़ाइन हेड है फुटवेयर डिवीजन के, उनके ग्लोबल टेक्निकल हेड है, जितने भी उनके टेक्निकल डिपार्टमेंट के ग्लोबल चीफ है वो सारे आज कोल्हापुर में चिन्ह किया, एक्नॉलेज किया और उसके पश्चात करके आज प्राडा की ग्लोबल जो टेक्निकल टीम है वो कोल्हापुर में आई है। उनके ग्लोबल डिज़ाइन हेड है फुटवेयर डिवीजन के, उनके ग्लोबल टेक्निकल हेड है, जितने भी उनके टेक्निकल डिपार्टमेंट के ग्लोबल चीफ है वो सारे आज कोल्हापुर में 6 लोग यहाँ आए हैं। और ये पहली बार ऐसा हुआ है कि प्राडा जैसा ग्लोबल छोटे शहर में आके ये चप्पल बनाने वाले कारागिरों से सीधा संवाद करने का प्रयास किया है। ये उनके चप्पल बनाने की प्रक्रिया का मुआयना कर रहे हैं, उनके प्राडा के टेक्नोलॉजिकल जो रिक्वायरमेंट्स है उस हिसाब से ये चप्पल कैसे बन सकती है इसके बारे में वो यहाँ के कारागिरों के साथ संवाद कर रहे हैं।
हमारे कोल्हापुरी चप्पल कैसी बनती है वो भी हमने दिखाया। हमारे जो कुशल कारागिरी है उन्होंने सब दिखाया कि चप्पल हम कैसे बनाते हैं, कैसे सिलाई करते हैं और उसका पहतावा कैसे है, उसका सोल कैसा है, उसका अंगूठा कैसा है। और उनके चप्पल में जो पहनी हुई थी वो हमारी कोल्हापुरी है, वो हमने उनको बताया और उनको हमने हमारी VIP डिज़ाइन भी दिखाई, जिसको हम कार टू कारपेट बोलते हैं, जो कि कार में और कारपेट पे पहनी जाती है। एकदम लाइट वेट आती है, फोल्डेबल रहती है और पॉकेट में भी हम रख सकते हैं। तो उनके पैर में पहनाने के बाद उनको वो अच्छी लगी और उन्होंने वो एक चप्पल खरीदी भी। और हमारी यही अपेक्षा है कि जब भी आगे काम चलेगा तो प्राडा हमारे कोल्हापुर से वो चप्पलें खरीदे और उनके प्राडा शोरूम पे वो सेल करे और कोल्हापुर का नाम हमारे जग भर में जाए।
And there's another update coming in. The Bombay High Court has dismissed a public interest litigation or a PIL against Italian fashion house Prada for its alleged unauthorized use of these Kolhapuri chappals. My colleague Charu, who has been tracking the case very closely, now joining me live with all of the details. Charu, we understand that the bench questioned the locus and statutory right of the advocates who had filed the PIL, but take us through the background and give us the context of this entire case.
So, look, we have to understand that under the trademark law, we have different kinds of trademarks given to different kind of commodities, services or products. For example, there are marks given to certain businesses, those are called trademarks. Then we have symbols, those are also trademarks. But if something is grown or produced or made in a particular geographical location, which has other, geographical connotations also for that particular place, usually a geographical indication tag, that is a GI tag, is given to that product. For example, we can consider champagne, being a geographical indication tag product, because if it is produced anywhere else in the world, it will not be considered a champagne. Similarly, we can also consider scotch that is produced in Scotland. If it is produced anywhere else, it is going to be, called by some other name. Similarly, Kolhapuri chappals are an integral part of the Indian society and have been, famously produced or made in our country in a particular region. And considering the fact that they were produced or, hyped about, made and crafted in India, in the Maharashtrian parts of the country specifically. The petitioners went up to the Bombay High Court, trying to save the GI tag in a way. Now what happened here is that the Bombay High Court's order is not out yet. The High Court has dismissed the PIL questioning the locus, but the reasons for dismissal are going to be, coming out in a detailed order soon. So we'll know what are the specific reasons. As far as locus is concerned, locus is having the right or having the nexus to go about a certain case if you are the party who can file such a case. So these are some legal questions. These do not necessarily define whether it can get a GI tag or not, or whether it can be protected or not. But these are, procedural things that the court has to deal with.
Right, Charu, thank you so much for that very comprehensive yet simple explanation of that case. Unfortunately, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Right now across the world, even Harvard is actually realizing that consciousness is a very important principle, and Harvard gives courses on mindful leadership, on conscious leadership, on conscious businesses.
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज़, और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you answers to all of your personal finance queries, and today I'd like to talk to you about returns. If you're using an application to invest, then you've probably seen the returns that your portfolio has generated in either green or red. Of course, if it's red, it's losses, but then hopefully you're experiencing a sizable amount of gains. But that's described in green, and you see something called XIRR. And for those of you that are wondering what this is, it's not a simple calculation of your return. It's actually the Excel formula that talks about internal rate of return. Now, I don't want to scare you away, but I will tell you that we're going to talk about the internal rate of return, we're going to talk about rolling returns, and we're going to talk about point-to-point returns so that you can make sense of your portfolio. And also, when you study the various schemes that are out there for you to invest in, you can understand the best parameters to look at to decide before you invest in any of them. Join me to talk about all of this is Prableen Bajpai, who's the founder of FinFix Research and Analytics. Prableen, thanks so much for taking the time and for agreeing to do this. It's going to be educational for all of us, I'm sure. So let's first start talking about, if you don't mind, let's talk about internal rate of return, because I think a lot of people look at it and they don't necessarily understand what it means. Can you explain what it is?
Sure. So, Alex, there are definitely different parameters which we use for calculating the returns for mutual funds. And I think choosing the right parameter is very important because, so that we omit all kinds of bias which is there while taking our investment decisions. So internal rate of return, or the extended internal rate of return, is basically a formula which takes into account periodic transactions as well. So majority of the other returns, which we'll subsequently discuss, give us a point-to-point sort of a return, or gauge the returns on the basis of where do you start and then where do you stop, and they do not cover the journey. So it's really important that we use a parameter which covers the journey, because there will be different transactions. For example, an SIP going into your account every month, there may be a periodic withdrawal. So this XIRR takes into account all of those transactions and then gives us the compounded return overall for the return journey. So it is one of the best methods to calculate or to gauge your investments, especially SIPs, because they are not having the same, every SIP will have a different lifespan. For example, over a 10-year period, if you're doing an SIP, some SIPs will have a lifespan of 3 years, some will have a lifespan of 9 years. So it calculates each and every point, the compounded return, and then gives us the consolidated picture for all of those transactions. It can also include lump sums which were added during your investment journey, as well as will take into account any redemptions which were done. So it's a holistic picture. And I think one of the good measures while choosing which fund you want to invest into, but of course not the sole parameter.
So just to, and just to elucidate this point, and I'm sure you have live examples, I want to throw out a hypothetical example at this point, right? So because you had the broader market indices, and here I'm talking about the mid cap 150 and the small cap 250, which in the start of the year fell by 20%, and then they recovered by 20%. So if you had a lump sum investment that you made in January of this year, then chances are that that has not grown by very much. It must be more or less where it was at the start of the year. If, however, you had an SIP, then your XIRR in that situation, or your internal rate of return, would be different, because you have installments that are coming every month, and you capture both the downside as well as the upside. Is that the right way to look at it?
Actually, Alex, honestly here, because we are looking at compounded returns for all these different time periods.
More than a year.
Yes. And in fact, Alex, even after a year, sometimes it's not a, it can give us slightly higher or inflated numbers, basically. So I would say after 1.5, 2 years is when the XIRR starts to look more stabilized. And I think that is when investors should be focusing on it, not less than 1 year period.
Okay, so then let me change the hypothetical, right? So assume that you had a lump sum investment that you put at the start of 2023, and we're now in 2025, mid 2025. And then you didn't do anything to that, but then midway through you started an SIP, you pulled some money out. It takes into account all of those transactions that you've done and gives you a blended amount. So in a situation, your original investment must have given you 10%, but in between, with the markets going up and down, you could actually have gotten a 12 or 13% XIRR as well. Is that fair?
Absolutely, absolutely, Alex. So basically, it's the compounded return for every transaction that we are making. So it will take into account the timing and the amount of cash flows which are added or redeemed. It will reflect the actual returns experienced by the investor. That is the most important thing. When you're calculating your XIRR, and it is your own investment, for example, you have an investment, let's say in a FlexiCap fund, and you've held it for a 5-year period. Your returns will look different from any other person's 5-year returns for the same scheme, because his investment period may be different from yours, right? It can be starting from 18, let's say, till 23. For me, it may be starting from 2020 to 25. So XIRR is an amazing tool for knowing your own returns and, making that comparison within your own portfolio, how your different schemes are doing, rather than comparing exactly different schemes. Of course, different schemes will also, over a same time period, give you an estimate how the returns look. But it's an excellent tool for gauging your own investment journey.
And funnily enough, Prableen, and people have studied this as well, the difference between having an SIP on the 5th of the month versus the 25th of the month, does that throw up a difference in the XIRR at all? And there's not a dramatic difference, let's point that out. But you've identified a few schemes to talk about, and can you tell us about them?
Yes. So, there are 4 different measures, Alex, which we'll be discussing. So in terms of XIRR, if you're looking at, and let's pick the 5-year returns. So I've taken 4 FlexiCap funds, HDFC, Motilal, Parag Parikh, and SBI. So on a 5-year basis, the scheme which tops is HDFC FlexiCap with about 24.98% returns, and the lowest is 14.83 by SBI. So, of course, within the same category, it is giving us an estimate on how the 5-year SIP returns look. 10-year returns are slightly different. HDFC becomes number 2. Parag Parikh goes to number 1, which was number 3 on a 5-year basis. And Motilal Oswal FlexiCap comes at number 3. But like we'll be talking about point to point, that is where, in the short time period, for example, a scheme like Motilal actually tops the chart. So that is why, gauging and analyzing all these different returns becomes really, really crucial.
About point to point next, because this is what a lot of people look at to analyze whether or not a scheme should be invested in. And what you've just pointed out, the winners in the recent past become front and center. People tend to say, gravitate towards that.
Yes, the recency bias and absolute returns are our favorite, Alex. So to explain, the point-to-point or absolute returns is, I think, what most of us love to see, especially when it comes to real estate. For example, I probably, like a 50 lakh apartment becoming a 1 crore apartment, you're like, oh, wow, it's 100% return. And you totally miss out on the time period. Whether it took 5 years or 50 years for that return to be generated, that is totally missing from point to point or absolute returns. So it's a great tool for gauging the investment, but for a period less than 1 year, because 1 year we are not looking at compounding. So if you want to see what is the recent performance, how did the scheme perform during a certain dip, or how has been the recovery during a short period of time, Alex, this is the go-to instrument. Then absolute returns is definitely great. But if you're trying to see your returns over a longish time period, then absolute returns is a big no. So if we are looking at the formula here, it's like the ending period value minus the beginning period value and divided by the beginning period value, the basic formula what we studied during school. And for a scheme, for example, HDFC, FlexiCap, if we just look at the absolute returns over the last 5 years, then the NAV actually went up from 570 to 2171. So it's like a 280% absolute return. And that is why we don't look at absolute returns over a 5-year period. This is over a 5-year period journey. But if you're looking at the 6-month period, for example, HDFC 6-month returns are 11.83. Motilal here becomes 14.17. So it becomes the topper in terms of absolute returns in a shortish time period, 6 months. Parag Parikh is only at 7.58, which was leading in terms of XIRR, and SBI now becomes number 3 with 7.79% returns. So it ignores any sort of fluctuation which happened during this time period. So no interim, importance given to what volatility happened, what sort of interruptions happened, doesn't account for cash flow in and out, and doesn't take into account the time factor.
Yeah, absolutely. You said it. And those winners and losers on a yearly basis will change quite dramatically based on the kind of tilt that a fund manager has towards one particular theme, and that is quite evident when you look at a patchwork over a period of time, Prableen. So the point is well made. Let's also talk about compounded annual growth rate, and that simply gives you a sense of how a scheme is done on an annual basis over a period of time, right?
Yeah, absolutely, Alex, you said it. And, just to go back to my example of real estate, I said that a 50 lakh apartment becomes 1 CR, it's like 100% absolute return. But Alex, because the time element was missing from absolute returns, let's just, add and introduce time here. So if I made the same returns over a 6-year period, then my CAGR becomes 12.25%. But if I made the same 100% absolute returns over a 10-year period, then my CAGR only becomes 7.18%. And that is the kind of difference time can actually make. And that is why we give so much importance to time, because returns is one thing. In what kind of a time period those returns were generated is equally important. So it's sort of an annual return that you get an estimate of that, okay, maybe over a 5 or 10-year period. This is the roughly annual returns which are made by CAGR. So it is taking into account the time element for sure. But again, the beginning and the end date remains very important. Something which is totally taken care of by the XIRR, what we had discussed earlier. So in this, again, beginning and ending becomes important, but it still gives us a standardization, a basic formula to estimate and compare different investments. And I think one thing which must be mentioned, that for most of the fact sheets and returns, Alex, that we see for mutual funds, if it is like 1 year, 3 year, 5 year returns, then CAGR is what is put there, the annualized returns. And when it is lesser than 1 year, then we are given the absolute returns. So it's a good method, but again, it is not taking into account the journey, the investment journey, if there are additions and deletions of investments during that time period. And just to give an estimate on the returns, for example, over a 5-year period, HDFC has given us 30.56% returns. SBI has given us 20.96. Over a 10